Yo guys, very good morning. So are you guys upset? Because you're going to miss me now. We are in our last chapter, International Finance, which we will take hopefully 3 days to complete, 3 more sessions to complete, each session hopefully around 4 hours. So with that you can say the syllabus is virtually completed. After International Finance, we will also be touching about mutual funds, which is a very small chapter. There are some four day before exam questions. There are big questions, day before exam questions in mutual fund, we will cover at length, and then a bunch of smaller questions and the concepts we will cover in mutual fund, and then 2 theory chapters of startup finance and securitization. Okay, so with that, our portion will be completed. But however, the last major area, where we have to do a lot of weightlifting, is in international finance. Okay, so without any delay, shall we get started? All right. So this is the beginning of the end of SFM for you. Let's start off with international financial management, or forex. Now in the CA final level, international finance is one chapter out of SFM. I went to do a certification course by ICA, and the course was itself named Forex and Treasury Management. Forex and Treasury Management. 2 things to note: treasury is what we have learnt in rest of the syllabus, that is portfolio management, equity valuation, bond valuation, everything comes under treasury. And there is forex. So at a professional level, forex and treasury are 50-50. Not just that they are 50-50, it is forex and treasury management. Forex takes precedence. Okay. So at a practical level, forex is a very, very important area. At a practical level, of all the subjects, of all the chapters we have discussed so far, perhaps the chapter that will be most relevant to you practically is international finance. I have been saying that for every chapter, I know, but I have always been qualifying it with an if. If you go into treasury management, forex important, portfolio is important. If you go into analysis, equity valuation will be important. Derivatives 5 years from now. So I have been qualifying it. At the moment, if you get a job this year, the most important area for you will be forex, because no matter whichever company you go to, no matter where you get employed, every company has some way or the other some form of currency, foreign currency exposure. That's something I said even for derivatives. Every company, that's the relevance of derivatives rather. The most risk that generally companies take is not regarding shares or their investment, it is in currency market. It's in currency market. The currency market is huge. I think according to data, some 200 trillion rupees of investment, rupees of transaction is happening on a day. Sorry, $200 trillion of transaction is happening in the currency market. That is main currency market and derivative currency market on a daily basis. Contrast that, the GDP of India, the annual GDP of India is itself 3 trillion. Contrast that with 200 trillion happening on a daily basis in the global currency market. This is a huge market, lot of importance to the economy as a whole and to every chartered accountant, either in the form of an investment or in the form of an import-export exposure. Some way or the other, your client or your employer will have some form of forex exposure. And with my interactions with my students and other corporate fellows, everybody often tells me that their company is struggling because the person in charge doesn't know how to deal with international finance. Okay, generally this is a weak area because chartered accountants, they generally, even as the students, they focus on tax, income tax, indirect tax, and a bit of auditing. Okay, auditing also is regarded as a theory paper. Essays is very strong, essay is very weak. Okay, mind you guys, essay very important. Okay. Recently, I went to a conference, SIRC conference, and one of the things that even MP Vijay Kumar sir stressed for professionals was focus on essays. We put a lot of focus on AS and IND-AS. Similar focus is not there on essay, which is lacking. The Quality Review Board has noticed that. So please pay very close attention to standards on auditing, a very, very important area. I am telling you as a professional. Okay, standards on auditing is a very important area. So even after that comes importance to SFM. SFM is mostly regarded among students, although a very interesting subject, it is mostly regarded students from an exam point of view, have a very professional outlook for SFM, especially this chapter called International Finance, professionally required. I had a student who is working in a corporate tell me that their company faces almost rupees 60 lakhs a year. Their company faces a loss of 60 lakhs a year because of IFM mismatches, because they are not able to handle their forex properly. Because of exchange losses, they are losing 60 lakhs. Many a times your forex dealer can thrift you off. Some small, nick a small profit, nick a small commission, they'll bargain with you, they'll negotiate with you, and in that negotiation you might lose some money. Okay. I also told you the story in derivatives of how one of the companies that I audited, the CFO lost his job. The CFO lost his job because a forward, a currency forward had to be cancelled. A currency forward contract had to be cancelled, and because of this one cancellation, the company almost lost rupees 11 crore rupees. Almost 11 crore rupees was lost in this single transaction of cancellation of currency forward, and the CFO had to quit his job because of that one transaction. Okay. International finance, very critical if you are into finance or even if you are into accounts and audit. A solid grip on international finance is essential for you as a professional. Okay. Maybe I am marketing to you a little bit, but please understand this is very important as for a professional. Okay. Treasury, more than treasury, I would give importance to IFM, and even at an academic point of view, this is the undertaker of this chapter, this is the heavyweight in this subject. Solid 15 marks will come from international finance. Out of that, generally 8 marks will be currency derivatives, either currency futures or currency options. 8 mark question has been repeatedly asked. It came consecutively for 3 attempts. After every other attempt, they ask a question from currency derivatives. So 8 marks from currency derivatives and another 8 to 10 marks from pure currency can be expected. 15 marks will be covered over here. Got it? So, on that note, shall we begin the discussion? Let us begin a discussion on international finance. So, day 1, we are hoping to cover the basic areas. We will basically cover rates, cross rates, and if time permits today, we will cover forward also. Rates, cross rates and forward, this will be our coverage today. Tomorrow we will cover money market hedge and currency derivatives. In the next class, we will cover money market hedge and currency derivatives, and the last class we will cover some miscellaneous areas including cancellation of forward and certain other miscellaneous areas. Okay, that will be our agenda. Let us see how time permits us. So, first thing, let us look at the rates. So, I am demonstrating a simple quotation to you of a dollar. Pay attention. This is a quotation. A rupee by dollar is 70.75. Such huge fluctuation will not be there. This is only for example's sake. Normally it will be 70.2, 70.4 or 71.5, 71.8. The difference will be very small. For demonstration's sake, I am giving you such a huge difference, 70 and 75. Okay. First of all, look at this quotation, rupee by dollar. This is your normal quotation. The denominator, the currency that comes below, dollar in this case, is called the base currency. Dollar is called the base currency. Our discussion is going to be about dollar. Okay. In this story, dollar is not a currency, dollar is an asset. When you say price of one share of Infosys, rupees 900. You see the price of one share of Infosys, rupees 900. Infosys is an asset and rupee is a currency. Similarly, when you give a quotation rupee by dollar, the sentence is $1 costs rupees 70 or 75. Rupees 70 or 75. Okay, so dollar over here is a base currency. Convert that to quotation, it will be rupee by dollar. The denominator is the base currency. It is an asset. It is not a currency, it is an asset. Our discussion is about $1. Note that the denominator is always 1. We are talking about $1. Our discussion is going to be about $1. Now, this dollar is expressed in terms of rupee, is called the counter currency or the quoted currency. counter currency or the quoted currency. $1 costs rupees 70 to 75. Dollar is called the base currency, it is the asset. Your discussion is about dollar, you talk about the price of dollar. Here you spoke about the price of a share of Infosys. Here you spoke about $1. Dollar is an asset, it's called the base currency. I am expressing dollars, I am expressing the value of dollars in terms of rupees. In terms of rupees over here, rupee is called the counter currency or quoted currency. So, rupee by dollar means, when you look at this quote, rupee by dollar means $1 costs rupees 70 or 75. $1 costs rupees 70 or 75. If I give a quotation saying dollar by euro, pay attention, if I give a quotation, rupee by dollar, very familiar to you, will understand. Look at this quotation, dollar by euro, or I'll take the fresh page. If I give a quotation saying dollar by euro, here euro is the base currency, euro is the base currency. Your discussion is about 1 euro, euro is 1, your discussion is about 1 euro, euro is the asset. The price of euro is expressed in terms of dollars, dollars is the quoted currency or the counter currency. $1 by euro is 1.1, 1.2. The price of 1 euro is $1.1 or $1.2. In terms of sentence, 1 euro equals dollars 1.1 or dollars 1.2. 1 euro is the asset. The price of this asset is expressed in terms of dollars. Rupee by euro. Again, euro is the asset. The price of this asset is expressed in terms of rupees. Understood? Now, come back. You have two currencies. You are expressing the value of dollar in terms of rupees, and that price, that value is 70 or 75. $1 is worth 70 rupees or 75 rupees. We had a small discussion of this in FRA also. What is 70 and 75? 70 is called the bid rate. 70 is called the bid rate. 75 is called the ask rate or offer rate. Ask rate or offer rate. 70 is called the bid rate. 75 is called the ask or offer rate. Okay. Let's have a look at that. Rupee by dollar, 70 or 75. 70 is called the bid rate. Remember, B. The banker buys at bid rate. This is the rate. You are buying currency. The banker, who is buying? Not you. The banker will buy. Buy what? What will he buy? We are talking about the asset. Okay. Now onwards, I will not specify. Okay. When I say buy what? Buy the share. Sorry, buy the dollar. Okay. Our entire discussion, when I say, the minute I say rupee by dollar, understand the entire discussion is about dollar. Now I will simply say buy it, sell it, trade it, receive it. Okay. Whatever I am saying, I am talking about dollars. Okay, any word I say, buy, sell, whatever I say is about dollars. I will not specify dollars because I have said rupee by dollar. Guys, understand, share of Infosys cost rupees 100. Okay, you bought or you sold. Did you sell rupee? No, you sold Infosys. Our discussion is about Infosys. Similarly, over here, dollar is no longer a currency, it's an asset. The minute I say banker buys the base currency. Okay, our asset over here is dollar. Okay, the banker buys $1. Banker buys $1 at the bid rate, which is 70. The banker will buy from you $1 for 70. Now, suppose you want to sell dollars, you will go to the bank and banker will buy from you at 70. You want to buy, you are a customer, you want to buy, the banker will sell it to you at the ask rate or the offer rate. Understand? You want to buy, When you want to buy, you will go to the bank. Okay, always visualize. Always whenever you see a question, walk, open the door, enter the bank. Go to the bank, go to the counter and ask the teller, Madam, can you give me $1? The banker will sell you $1. At what rate? At 75. The banker will sell at 75. Or suppose you have $1 in your pocket. You have $1. You want to sell it. The banker will buy it at 70. The difference is the profit to the bank. It's called the spread. The difference is called the spread. There is a profit for the bank. Okay. On top of that, he will also take transaction charges. That is a different story because there is a profit to the bank. Understood? Shall we do an example? In every question, we will be faced with two challenges. The first and the most important challenge will be for this question. Do we use bid rate or do we use ask rate? Okay, if you go wrong with it, the entire question is wrong. Okay, the most important, and we will devote more than half an hour time to get this thorough. Do we choose bid rate or do we choose ask rate? For that, we will devote half an hour. Okay, so let's look at an example. After the example, I will explain a shortcut. Okay, so let's look at a very quick example. You are an exporter. You are an exporter. Which national are you? Are you Indian? See, whenever I say you, if I by default say you are Indian. Otherwise, I will specify you are American or you are European or you are African. I will specify that. If I don't mention anything, you are Indian. Okay. So, you are an Indian exporter. If I don't mention the nationality, it is Indian. Otherwise, if I specify American, means okay. If I don't specify the nationality, you are Indian. You are an exporter. You exported goods worth $1 lakh to US. You export goods worth $1 lakh to US. I think I'll write over here. You exported goods worth $1 lakh. You exported goods worth. You exported goods worth $1 lakh to US. The exchange rate is rupee by dollar 70 and 75. Find your receipt in rupees. Find your receipt in rupees. Okay. Pay attention. Receipt. Receipt is equal to, pay attention guys, receipt is equal to, you have sold goods worth 1 lakh. You have exported goods worth 1 lakh. So, what will happen to you? You will receive $1 lakh. When you export, you will receive $1 lakh. So, in your hand, you have $1 lakh. In your hand, you have $1 lakh. Now, you are in India. You feel hungry. You go outside, you have this shop and you want to buy parota. Okay. With this dollar, can you buy parota? Can you buy chapati? Can you buy roti, dosa, idli? Can you buy anything? No. What do you need? You need rupees. Okay. So, this $1 lakh has to be converted to rupees. Pay attention. $1 lakh has to be converted to rupees. What do? You go to the bank. You go to the bank and tell the bank, banker, I have $1 lakh. Take this $1 lakh and give me a rupee instead. Or in other words, this is your asset. You will sell the dollar. You will sell this dollar to the banker and you will take rupee instead. Or the other way around, the banker will buy dollar from you. You will sell dollar, the banker is buying dollars from you. What is the rate at which he will buy? He will buy at his buying rate, which is bid rate of 70 rupees. So, receipt in rupees is equal to $1 lakh. In all the earlier chapters, I have told you that in the final answer, you have to give the currency and the symbol appropriately. Percentage means percentage, rupee means rupee. In this chapter, IFM, in every step, with every figure, you have to give the corresponding symbol. Very important. Else the final answer, because as the problems get bigger and more complicated, you will have a lot of, when you come to currency features, there will be bid, there will be ask, there will be future rate, there will be different rates, there will be a contract size, that will have another currency. So all these will mix up together and our final answer will be very confusing. So with every figure, you have to write the corresponding currency. Also mind you, you cannot by default assume everything is in rupees. There will be questions where none of the currencies are in rupees. Okay, so very important that corresponding to every figure, you write the symbol. Okay, so dollars 1 lakh into, you will go to the bank, you have received 1 lakh. You will go to the bank, you will sell $1 lakh to the banker. You will sell $1 lakh to the banker. The banker will buy that $1 lakh from you at the banker's buying rate, BBB. Banker buys at bid at 70. Or always remember at the smaller of the two rates, into rupee by dollar 70. 1 lakh into rupee by dollar 70 is equal to rupees 70 lakh. Understood? Now, for every question, you have to go to the bank. But this interaction is a bit complicated for you. You received dollars, you went to the bank, you sold dollars, the banker. Then you have to go to the banker's point of view. You have to shift your mind, go to the banker's point of view. Banker is buying from you at the bid rate. This transaction is different. Again, what if banker and banker? One bank is transacting with another bank. What will you do? So in all these cases, this becomes a little difficult, this interaction, especially when you're looking at a long question with so many rates. Sometimes this becomes a little difficult, this interaction becomes a little difficult. So I will teach you a shortcut, okay, a beautiful shortcut. In almost all the SFM batches I have taught outside Kerala, students have made it a point to mention this shortcut as the most beautiful shortcut in the syllabus. Okay, in Kerala this shortcut doesn't have much value because my teacher Raman sir discovered it. Most of the students have heard it from him, so they don't have much value. But outside Kerala, I have seen that this has a lot of value. Maybe other teachers are also teaching. I have not seen any other teacher teach it. This is a genius of Raman sir, to my knowledge. Listen to this shortcut. Okay. So you need not have this interaction with the banker every time. Understand, pay attention. The shortcut is, write it down, up the bid, down the ask. Up the bid, down the ask. If you are moving from dollar to rupee, you are moving up. If you are converting dollars to rupees, you are moving up. You need the bid rate, up the bid. If you are moving down, you are converting rupee to dollar. You are going down. You need ask rate. Remember the story? Up the bid. Remember the rhyme? Up the bid, down the ask. Up the bid, down the ask. You are moving up in this quotation. You are moving from dollar to rupee. Up the bid. If you are moving down, rupee to dollar, down the ask. Okay, this is one of the shortcuts. I have seen one of my colleagues, Tarun Jagadish sir, has a different story. He draws a cross, just like we did for futures. He draws a cross. That's a different shortcut. Guys, if you are already familiar with a method, you can very well follow that. Okay, I am not forcing you to use this method. If you are already familiar with the method, please follow it. If you are confident in that method, please follow that. If you are even 1% weak, please come to this method, because this is a foolproof method. I can guarantee you, in every situation this will work. There is not a single situation where you have to violate this rule. In every situation this will work. Up the bid, down the ask will work. Okay, so this is a foolproof method. If you have any other method and you are thorough in that method, you can definitely follow that. Okay, like standard costing, IFM is an area where each faculty will have his or her own method and they will teach you in that respective way. If you've already attended some other class with direct quote, indirect, I'll come to that. Direct quote, indirect, I'll come to you in a minute. If you've already learnt a method, you can follow that. Else, this is a foolproof method. This is an amazing method. Okay, let's look at another question. You have imported. See, in this question itself, you are converting dollar to rupee. Okay, you are converting dollar. You have received dollars. You are going to bank. You are converting dollar to rupee. Dollar to rupee, up the bid. This question is done. Okay. Bid. Now, next question. You have imported. Goods worth $5,000. You have imported goods worth $5,000. You are an Indian. Okay, I need not specify. You are an Indian. You have imported goods worth $5,000. The exchange rate is rupee by dollar is 70 and 72. Okay, find the amount payable in rupees. Payment in rupees is equal to, yes, pay attention, you have $5,000, you have $5,000, you are required to find out in rupees. Okay, so what are you converting to what? You are converting dollar to rupee. No, you are not converting dollar to rupee. Pay attention, guys, very important, those are mistakes that students often make. Okay, you have $5,000, you need to find out how many rupee. You are not converting dollar to rupee. That's not the story. Listen to what happens. You are an importer. You have imported some goods. I wanted this pen, I bought it freshly from US. Okay, I imported this pen from US. I imported the goods. Now I have to make the payment. How much payment should I make? I need to pay $5,000. Do you have $5,000 with you? No. You are an Indian citizen. You opened your purse and you saw you only have Indian rupees. Okay. I have in my hand, you are an Indian importer. In your hand, you have rupee. Guys, pay attention. In your hand, you have rupees. Now you have to convert this rupee to dollar. You have to convert rupees to dollar. At what rate will you do that? You will do it at the ask rate. You are an Indian citizen. You have, what do you have in your hand? You have rupees. You have to convert this rupee. To dollar at the ask rate. Down the ask is 72. Think of the other way. What is happening? You have rupee. What do you want? You want to pay $5,000. So what will you do? You will go to the bank and you will buy $5,000, or the other way, the banker will sell you $5,000 at the banker's selling rate of 72. Okay, so you will have to pay $5,000 into rupee by $72. 5,000 into 72, I think is rupees 3,60,000. Is it 3,60,000? Let's quickly check it out. Into 72 is 3,60,000. Yes, mental maths is rupees 3,60,000. Okay. So far the journey was quite easy. Why? Because one of the currency involved is rupee. Okay. Now when the journey gets difficult is when you don't find your very dear sweet friend rupee in the question. Shall we check that out? Question. You are a French importer. Guys, I am not proceeding forward until I am convinced that you watching this video, whichever part of the world you are thorough. Until I am convinced that you are thorough with this topic, I am not going to move forward. Okay, we will keep doing examples of this topic. Okay, a French importer. There are 213 countries in the world. We will explore every single currency and mix it up. 213 currency exchange with each other. Do the permutation. How many questions you will be able to do? A French importer imported from UK. A French importer imported from UK goods worth pound 6,000. Goods worth 6,000 pounds. Find payment. To be made if the exchange rate is pound by euro 0.8, 0.9. Always remember guys, bid is the banker's buying rate and ask is the buyer's selling rate. Bid will always be less than ask. Okay, bid will always be less than ask. Okay, now let's discuss this. Okay, so you are a French importer, you have imported from UK. Find the payment to be made. $6,000, find the payment to be made. Okay, payment to be made. Payment in euro. By the way, what is the currency of France? For currency of France, the currency of almost all of Europe is euro. Only UK has pound. Okay, UK has pound sterling. We'll have a brief discussion about that. I want you to know the important currencies of the world and also the capital and the major cities. Okay. If you are watching cricket or football, preferably cricket and football, you will be familiar with all the European cities. That is good for you. They generally ask Frankfurt has exported or Madrid has imported. These kind of questions will come. I think the recent, I think 2018 one question was from Melbourne. Okay, and I remember one of the students didn't know which country Melbourne is from. Okay, so these kind of difficulties happen to you. I want you to know Melbourne is from, cricket watching students will know Melbourne is Australia, Madrid, Spain, Paris, France, Frankfurt, Germany. What is the capital of Germany? Berlin. We will have a small discussion of all this. Okay, every now and then I will just mention that. If you don't know, please mention the city and the country and the corresponding currency. Now, payment in euro is equal to, you have imported goods worth 6,000 pounds. Who are you? You are a French importer. You are a French importer. You are from France. What currency do you have inside your pocket? What currency do you have? You are from France. Your home currency is euro. Your home currency is euro. So, in your pocket you have euro. You imported from UK, which means you have to make the payment in pound. You have to make the payment in pound. You are an importer, so you have purchased something, you have to make the payment in pound. What do you have with you? You have euro. You have with you euro. You have to make the payment in pound. Okay, understand? You have euro, you have to make the payment in pound. What is the rate? You have to convert euro to pound. You have to convert euro to pound. Up the bit. You have to convert euro to pound. Now onwards, I am not going to the bank. Okay, I am not going to the bank and negotiating. What is bank buying? What is bank selling? I am not going to discuss that. Understand? You have euro with you. You have euro with you. You have to convert this euro to pound. You have to go up the bit. You have to go up the bit. Okay? Pakka? Some people remember, import means ask rate, export means bid rate. That is also wrong. That is correct if you have only direct quotes. Okay, what is direct quote, what is indirect quote, we will discuss in a minute. But this method works everywhere. Okay, this method works everywhere. There is an indirect quote, by the way. If you have already studied something and you are confused, there is an indirect quote. Okay, so anyway, you are converting. One more mistake that students often make, they see in the question what is given? Pound. In the answer, what do I have to find? Euro. I have to convert pound to euro, which is wrong. Okay, you are not a clerk. You are not a clerk. You are not just doing maths. This is not third standard maths. You have pound in the question. You have to find answer. Convert pound to euro. That's not what you are doing. You have to be in the situation. You are a French importer. In your hand, in your pocket, you have euro. You have to convert euro to pound. You have to convert euro to pound. The rate is bid rate 0.8. Question number 1. Now, second issue we have over here. When it was rupee and dollar, it was very simple. You would simply multiply. Happily you will live. In this question, you have pound and dollars. You have pound and dollars. Pound 6,000. You are not converting euro. Okay. To pay pound 6,000, how much euro you need? That's what you are finding out. To pay 6,000 pounds, how much euro you have to convert? Your conversion is euro to pound. You are not converting 6,000 pound to euro. Do you have 6,000 pound with you? Do you have 6,000 pound with you? You don't have 6,000 pound with you. You have to pay 6,000 pound. To pay 6,000 pound, how many euro you have to convert? Always understand the words like you are converting euro to pound. Okay. This is question number 1. Now, second question. Converting euro to pound. You decide the rate was, see, pound by euro is 0.8, 0.9. We decided I am French, I have euro, I have to convert euro to pound. Okay, I have to take bid rate. Now, second question, should I multiply 0.8 or divide 0.8? Okay, 1 euro is 0.8 pounds. Understand what does pound by euro mean? 1 euro, euro is a base currency, euro is the asset over here. 1 euro is 0.8 pounds, means 6,000 pounds, how many euro? My brain will get hang, okay, my brain will get stuck over there when I come to this computation, okay, see, listen very carefully. 1 euro is 0.8 pounds, means 6,000 pounds, how many euro? That's a bit confusing, okay, so what we do is pay attention. You have 6,000 pound over here into, just try it, into pound by, let's multiply first of all, okay, let's just multiply, let's see what happens, into pound by euro 0.8, I am not thinking, I am just multiplying, okay, 6,000 pound into pound by euro 0.8, see what is happening, you will get the answer, any child will get the answer, look at the symbols, pound into pound, what is pound into pound will become pound square, pound into pound will become pound square, divide by euro, this is not the answer you want. You want the answer in euro. Now let's try the other way. Let's divide it. Let's try dividing it, or let's try multiplying it with euro by pound. Let's multiply with euro by pound. Now what happens? Pound and pound gets cancelled. Euro comes in the numerator. Your final answer will be euro. If you have noticed in the previous question, we have done that. That's why I told you to write the symbol. Okay, in this question, see, dollar and dollar gets cancelled. Your final answer is in rupees. Okay, one more question we did over here also. Dollar and dollar gets cancelled. Your final answer is in rupee. That's what you need. Okay, so over here also, you want pound and pound to get cancelled and the final answer to be in euro. So for that you have to multiply with euro by pound. What is given in the question is pound by euro. How do you convert? Take, instead of 0.8, take 1 by 0.8. Okay, so you have to multiply with not 0.8, you have to multiply with 1 by 0.8. 1 by 0.8 pound by euro. 1 by pound by euro means euro goes to the numerator, pound and pound will still get cancelled. Okay, so you will get 6,000 divided by 0.8. I need a calculator for that. 6,000 divided by 0.8 is 7,500 is 7,500 euro is 7,500 euro. Understood? Shall we try one more question? We'll try many more questions. A German exporter exported to Chicago. Where is Chicago? Chicago is in US. Goods worth $50,000. A German exporter exported to Chicago goods worth $50,000. Find the receipt. What is the currency of Germany? Germany is also in Europe, it's euro. Find the receipt if dollar by euro is 1.2, 1.3. Find the receipt if dollar by euro is 1.2, 1.3. Let's check that out. Receipt in euro is equal to, what is the currency rate? Dollar by euro 1.2, 1.3. Who are you? You are a German exporter. You are BMW. Okay, you are a German exporter. You exported goods to US worth $50,000. What will happen when you export? What will you happen? You will get $50,000. Do you need dollars? No, you are in Germany. In Germany, if you have to do business, you need euro. So what should you do? You should convert dollars to euro. You have to convert dollars to euro. The rate is down the ask. Should you go to the bank? Should I go to the bank and tell you the story? What happens? You will go to the bank. Okay, what do you have with you? You received $50,000. You are an exporter, so you have received $50,000. You will go to the bank and you will sell dollars. You will go to the bank and you will sell dollars. The banker will buy dollars. The banker is buying dollars. But understand, over here the base currency is euro. The base currency is euro. So the banker is buying dollars and selling euro to you. Here you cannot say buying dollars because dollars is not the base currency. The base currency is euro. So you have to speak in terms of euro. Okay. So you will go to the bank. You will go to the bank and give him dollars. Give him dollars and buy euro instead. The banker is selling euro to you. Banker's selling rate is 1.3. This explanation is a little more confusing. It is convincing but confusing. That's why I don't go for this explanation. This is easier. This works everywhere. You are a German exporter. You have received $50,000. You want to convert dollar to euro. You want to convert dollar to euro. Down the ask. Simple. Story over. You don't have to go to the bank. Okay. When you go to the bank, then you have to check what is the base currency. That discussion is quite confusing. Okay. So this is easier. Converting dollar to euro. Down the ask 1.3. So dollars 50,000 into dollar by euro. When I write this in your mind, it will come bang, 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 error, error, error. What happens? You cannot multiply dollar and dollar. Dollar and dollar becomes dollar squared. Okay. So you have to multiply with reverse, euro by dollar. So you cannot multiply with 1.3. You have to divide. Understand guys? What just happened over here? You tried multiplying. You tried multiplying the rate. Dollars 50,000 into dollar by euro multiplying. You tried multiplying. They cannot multiply because dollar and dollar will get cancelled. Sorry, dollar and dollar become dollar squared. So you cannot multiply. You have to divide into 1 by dollar by euro. 1 by dollar by euro means, if you remember your math, euro will go to the numerator, dollar and dollar will get cancelled. Dollar and dollar will get cancelled, euro will go to the numerator. Okay, that's how maths works. So 1 by dollar by euro, 1.3. 50,000 divided by 1.3. Take out your calculator. What is 50,000 divided by 1.3? You will get 38,461. You will get your final answer is euro 38,461. Okay. One more example. Which country do you want to go to? We are going on a world tour, guys. Come on, let's enjoy. Let's say an Italian. Italian importer imported from US. Italian importer imported from US goods worth $7,000. The exchange rate is euro by dollar, 0.85, 0.95. Italian importer imported from US goods worth $7,000. The rate is euro by dollar, 0.85, 0.95. Find the payment in euro. I can do it over here itself. Payment in euro is equal to, you are an Italian importer. Okay, Italy is in Europe. What is the currency of Italy? Euro. Okay, the currency of Italy is euro. Yes, the currency of Italy is euro. Or is it lira? Lira is Lebanon or some other country. Italy is euro. So you are in Italy, you have euro with you, you need the euro, you are an importer. So you need to convert, you have to pay in dollars, you have to pay $7,000. You have to pay $7,000. You have to convert your euro, the euro that you have in your hand, to dollars. You have to convert euro to dollars. Down the ask 0.95. Okay, you have to convert euro to dollars. Down the ask, 0.95 dollars 7,000. Let's try multiplying first into euro by dollar 0.95. Dollar and dollar gets cancelled. You will get the final answer in euro itself. You will get euro 7,000 into 0.95 is I think 6,000. Let's check it out. 7,000 into 0.95 is 6,650. 6,650. Got it? One more example. Let's try one more example. Let's go with Indian. You, pay attention guys, pay attention. You exported to US, or do you want to export to UK? We'll go to US itself. You exported to US goods worth, you exported to US goods worth rupees 20 lakh. You exported to US goods worth rupees 20 lakh. Okay. But when you send it to US, you cannot have 20 lakh in your invoice. You have to invoice it in dollars. Find amount to be invoiced. What amount should be there on your invoice such that you receive 20 lakh rupees? The exchange rate is rupee by dollar 74.75. Okay. So here guys, you are exporting goods worth 20 lakh rupee. Find out the amount to be invoiced in dollars. Find out the amount to be invoiced in dollars. You are exporting in 20 lakh rupee. You have to find the amount to be invoiced in dollars. You are converting rupee to dollar. Wrong. Are you converting rupee to dollar? Do you have 20 lakh rupees with you? Are you converting? See, in the question it's given rupees. In the answer you have to find dollar. Are you converting rupee to dollar? No. Pay attention guys. You are an exporter. You are an exporter. Pay attention. Pay very close attention. You are an exporter. You are an exporter. You are exporting some goods that is worth 20 lakh. Okay. You export it to US and the US person is sending you money. What money will he send you? Will he send you rupee or dollar? He will definitely, the US fellow will definitely send you dollars. The US fellow will definitely send you dollars. Okay. How much dollars he send you? That you don't know. That you have to find out. How much dollars he should send you so that you are getting 20 lakh rupee. Guys, understand, he will send you dollars. That dollar you have to convert to rupee. That dollar you have to convert to rupees. Here also the conversion is dollar to rupee. Here also the conversion is dollar to rupee. Up the bit rate. Up the bit rate. Okay. Come on guys, pay attention. Amount to be invoiced. Amount to be invoiced is equal to rupees 20 lakh. Yes, pay attention. What is the exchange rate? Exchange rate is rupee by dollar 74.75, 74 and 75. You are an exporter. You are converting dollar to rupee. You are converting dollar to rupee. It is up the bid. The rate is 74. Okay, you are an exporter. You are receiving dollars. You don't know how many dollars you are receiving. That you have to find out. But you are still receiving dollars. That dollars you have to convert to rupee. It is still up the bid. Up the bid. The rate is 74. The rate is 74. Okay. So 20 lakh into rupee by dollar. Bang, 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 bang. Rupee and rupee cannot be multiplied. This is wrong. So you have to divide. So divided by 1 into 1 by rupee by dollar 74. What is 20 lakh divided by 74? It is 27,027. dollars 27,027 dollars 27,027. So you have to raise an invoice for dollars 27,027. He will send you dollars 27,027. You will convert that dollar to rupee. You will convert that dollar to rupee. You will convert that dollar to rupee. The quotation is rupee by dollar. You will convert dollar to rupee at the rate of 74 and you will get 20 lakh rupees. Understood? Are you getting the clarity, guys? One more question. We'll do one more question, one more example. Okay? Pay attention. Let's finally become a US citizen. Okay, let's take green card, let's become a US citizen. An American exporter. An American exported goods worth $10,000, 10,000 to London. I don't know any other city in UK. To London. Okay, an American exported goods worth $10,000 to London. London is in which country, by the way? It's in Britain. It's in Great Britain. It's in UK. Okay. Exported goods worth $10,000 to London. Find amount to be invoiced. Find the amount to be invoiced. You are an American, you are exporting goods worth $10,000. This is your good, this cost $10,000. You are exporting it to UK, you are exporting it to London. Okay, and when you export it to London, you have to raise the invoice. They are asking you to please raise the invoice in UK pounds. What is the currency of UK? It is pounds. Please raise the currency. Please be invoiced in pounds. Please raise the bill in pounds. The exchange rate is dollar by pound 1.3, 1.4. Dollar by pound 1.3, 1.4. Okay. Tell me, guys, bid or ask? Bid rate or ask rate? Who are you? You are an American exporter. You are an American exporter. This is the line of thinking. Okay. You are an American exporter. You have exported goods worth 10,000 to UK. What will happen then? Visualize. You will get pounds. You will get, the person in UK will send you some amount in pounds. He will send you his payment in pounds. What will you do with that pound? You will convert that pound to dollars. You will convert those pounds to dollars. You are sending to UK. He will send you pounds. You are sending goods to UK. That person will send you money in pounds. You are converting that pounds to $10,000. You are converting. How many pounds you don't know? How much pounds he is sending, that you don't know. Whatever he is sending, you are converting it to dollars. That unit is $10,000. Okay. So, you are converting pound to dollar. The rate is bid rate 1.3. Okay. Please, again I am repeating, in the question they are giving you dollars, answer they are giving you pounds. Don't jump to dollar to pound. Okay. You are not converting dollar to pound. You are an exporter. You will receive pound. You have to go to the bank and convert pound to dollar. You are receiving pound. You have to convert pound to dollar. Up the bid. Up the bid. Question 1. Okay, so let's convert that. Dollars 10,000 into dollar by pound. Bang, 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 bang. Alert. Can you multiply? Dollar and dollar cannot be multiplied. So you have to divide. So let's try that out. Dollars 10,000 into 1 by dollar by pound 1.3. 10,000 divided by 1.3 is 7,692.31. So amount to be invoiced. Amount to be invoiced is pound 7,692.31. Done? Okay. This is the basic area. Okay, I hope you have written down all these questions in the formula page. Please write down all these questions and write the answers also. Hope you have solved it on your own. Okay, so or we have solved it together. Understood? Next question. Next question. Pay attention. Again, you are a UK person. Okay, a UK based exporter. A UK based exporter exported to US. A UK based exporter exported to US goods worth exported to US goods worth $2 lakh. Don't fast forward, guys. This is an important, this is a new concept. Okay? This is a new concept. UK based exporter exported to US goods worth $2 lakh. Find receipt. Find receipt if the exchange rates are dollar by euro 1.1, 1.2, pound by euro 0.8, 0.9, pound by euro 0.8, 0.9. Give the subheading cross rates. Give the subheading cross rates. Guys, understand, UK. You are a UK citizen. You are exporting. What is your currency? Your currency is pound. Your currency is pound. You are exporting to where? You are exporting to dollars. Goods worth 2 lakh. You are exporting in dollars. Okay. So you are exporting in you are exporting goods worth $2 lakh and you have to receive it in UK. You went to the bank and asked them the exchange rate. You went to the bank in UK and asked them, sir, what is the exchange rate? Sir said, sir, where are you exporting? To US. I have never heard of that country, sir, before. Where is that country? Hey, US, yeah, it's across the Atlantic Ocean. That big country Donald Trump is ruling. Okay, sir, I have not heard that country. We know only Europe. Let me call and ask Europe. Let me call and ask Europe. So they called and asked Europe and they said, yeah, I have heard of US. It's some country over there. The dollar to euro exchange currency is available. And you know Europe, you know pound to euro also. Now you have to find out dollar to pound. You have to find out dollar to pound or pound to dollars. Guys, this case will never happen. Okay, but practically what happens is if you are exchanging to a currency, if you are exporting or importing from a country that your bank doesn't know about, doesn't have a direct exchange rate, because India will have exchange rates with the Middle East, Nepal, Pakistan, Sri Lanka, all the neighboring countries and all the major countries, Euro, UK, pound, US, all those countries. But if you are exporting to say Uzbekistan or Uganda, okay, rupee may not have a direct exchange rate with Uganda. You go to SBI, he may not even know. I don't know what is the currency in Uganda. Okay, so in such a case, you will have to convert, you know, the rupee to dollar rate. Dollar being a global currency will have an exchange rate with Uganda. Whatever is the current currency of Uganda, that to dollar, you will have an exchange rate. Based on these, you have to find out a rupee by Uganda currency. You have to compare it. This is called cross rates. Okay, this exists when you are exchanging, when you are transacting with countries where you don't have, your country does not have a direct exchange relationship with. Okay, now when you went to the bank, there is no direct pound to dollar exchange rate. You have these two rates. So from these two rates, you have to find out a pound dollar relationship. Let's work that out. Okay, so find the receipt. Let's check it out, guys. Receipt in pound. You are a UK person, you need the final answer should be in pound. Okay, receipt in pound is equal to, receipt in pound equals, how much have you exported? You have exported goods worth $2 lakh. So receipt in pound is $2 lakh. Please follow me very carefully. Please follow me very carefully and follow the steps. Okay, $2 lakh into, you need dollar and dollar to get cancelled and you want the final answer in pound. So you need into pound by dollar. You want into pound by dollar. You look at the question. Have they given pound by dollar? Have they given pound by dollar? Pound is here, dollar is here. They don't have a pound by dollar currency. So you have to go to working note 1. You have to go to working note. I am really regretting the small screen size now. Working note 1. You need pound by dollar. You need pound by dollar. You can find dollar by pound also, then you have to divide. Okay, better to find pound by dollar. Okay, here if you find pound by dollar, you can directly multiply. Okay, if you find dollar by pound, then you have to divide. Okay, let's not go to that trend, let's go to pound by dollar. The middle currency is euro. Pay attention and tell me if this is correct. Pound by dollar is equal to, just tell me if this relationship is correct. Pound by dollar is equal to pound by euro into euro by dollar. Is this correct? Euro and euro gets cancelled, you get pound by dollar. Correct? Euro and euro gets cancelled, you get pound by dollar. Correct? So this is correct. Okay, you found out pound by dollar equals pound by euro into euro by dollar. Now let us find out the rates one by one. You have written this much, guys. First you have written step 1, payment receipt in pound is equal to $2 lakh into pound by dollar. You wrote that. Then you came to working note and wrote down what is pound by dollar. Pound by dollar is equal to pound by euro into euro by dollar. Now go to the question. Go to the question. What are the exchange rates given? Pound by euro is given. Okay, and dollar by euro is also given. Now see what is happening. You are an exporter. You are a UK based exporter. You are receiving dollar. You are receiving $2 lakh. What will you do? First, dollar has to be converted to, this may be confusing. First, dollar has to be converted to euro. Then euro will be converted to pounds. That is what is happening. First, dollar is converted to euro. Then euro is converted to pound. So over here in dollar by euro, you need bid rate. In pound by euro, sorry, in dollar by euro, you need ask rate. I marked it correctly, I said it wrongly. Okay, down the ask. In dollar by euro, you need 1.2 ask rate. In pound by euro, up the bid rate. You found out the rates. You found out the rates. Okay, mistake that students often make. Very often, they select up the bid and down the ask over here. Here they say, okay, first dollar to euro, up the bid, then euro to pound, up the bid. No. You cannot select up the bid and down the ask in the answer. Okay, you cannot select up the bid and down the ask in the answer because that is not the rate given. The rate given is over here. Here only, over here you have to select. Over here you have to select whether it is up the bid or down the ask. Okay, over there you cannot select. Over there it is euro by dollar. Over there you cannot select up the bid. That is wrong. That is wrong. In the question you have to select up the bid, down the ask. Okay, so I have selected 1.2 and 0.8. Okay, now look at what is asked. You need pound by euro. Pound by euro is given. Pound by euro, what is the rate? It is bid rate 0.8. So you take that 0.8. Take that 0.8. Next you need euro by dollar. Next you need euro by dollar. Have they given euro by dollar? No. They have given you dollar by euro. So this rate of 1.2, this rate of 1.2, you have to take it in reverse. 0.8 into 1 by 1.2 is equal to 0.8 divided by 1.2. What is 0.8 divided by 1.2? Is equal to 0.8 divided by, sorry guys, 0.8 divided by 1.2 is 0.667. Mind you now, 0.8 divided by 1.2, 0.6667. Very important point. 0.6667 you can round off to, it is 0.6667. Round off to 0.67 or 0.667 or 0.666667. In calculator it will be 6666667 or rather 66666 it will go on. Okay. In foreign exchange, exchange rates are always expressed in 4 decimal places. Your answer has to be in 4 decimal places, not less than it, not more than it. Okay, your answer has to be in 4 decimal places, 0.6667. Correct up to 4 decimal places. In your calculator, the answer will be 0.666666. It will go on like that. Okay, it has to be 0.6667. And what is the final answer? Final answer is pound by dollar. Final answer is pound by dollar. Okay, so you will get over here. Put that in step 2. Pound by dollar, you found out is 0.6667. Take up to 4 digits. Don't take 500 digits. Don't take only 2 digits. It's correct up to 4 digits. The only currency, I think yen alone takes only 2 digits. When the exchange rate is in yen, you take only 2 digits. Every other currency takes 4 digits. That's the international practice. Okay, so you also have to follow it. It is not. In capital budgeting, I have given you discretion. Take 3 digits or 4 digits or whatever you want. Okay, not much flexibility. Over here, it's very important. Take correct up to 4 digits. Okay, that rounding difference. The final answer difference not material, but the step is important. Okay, whether they cut marks, I don't think they'll cut marks for it, but this is an important point for you to know. Okay, I don't know if they'll cut marks for it. So final answer is 2 lakh into 0.6667, 1,33,640 pound. Your final answer is pound 1,33,640. This is ideal. This is ideal. Got it? Understood cross rates. Shall we do one more question? We'll do 2 more questions in cross rates. We'll do 2 more questions in cross rates. Okay. Which all countries do you want? Shall we include India now? You exported. You imported. You imported from Spain, from Madrid. You imported from Madrid. Madrid is the capital of Spain. You imported from Spain goods worth euro 8,000. Okay. You imported goods from Spain, goods worth euro 8,000. The exchange rates are rupee by pound is 90, 92, 90 bar 92 or 90 hyphen 92. Normally it is bar 90 bar 92. The exchange rate of euro with pound is 1.1, 1.2. Find the amount to be paid. You imported from Spain goods worth euro 8,000. The exchange rate is rupee by pound 90, euro by pound 1.2. Find the amount to be paid in rupees. Okay. So let us find out. Payment in rupees is equal to I hope you are not fast forward thinking this step is repeating. The previous question was based on cross rates, which is an important concept. Okay, pay attention. Payment in rupees is equal to euro 8,000 into rupee by euro payment euro 8,000 into rupee by euro, so much. Okay, rupee by euro. Do you know what is rupee by euro? Do you know the exchange rate for rupee by euro? Just a sec. You don't directly know the exchange rate for rupee by euro. You know rupee by pound and pound by euro. So you have to go to cross rates. Okay. So you have to go to cross rates. Go to working note 1. Go to working note 1. Cross rates. Pay attention, guys. You don't know rupee by euro, so you went to working note 1 cross rates, and you're trying to find out rupee by euro is equal to, the flow is important, the order is important. Okay, don't confuse it. Rupee by euro is equal to rupee by pound into pound by euro. Rupee by pound into pound by euro. Pound and pound gets cancelled, you will get rupee by euro. Wrote down this much, then come and select the rates. Then come and select the rates. Then come and select the rates. What are you doing? Who are you? You are an Indian importer. You have to pay 8,000 euro. Do you have euros with you? Do you have euro? No, you have only Indian rupee. So what should you do? You have to convert rupee to euro. How do you do that? First convert rupee to pound, rupee to pound, rupee to pound, down the ask. Then convert pound to euro, pound to euro. You rupee to pound, you got pound, then convert pound to euro, up the bit. So the rates are 92 and 1.1. Rupee by pound is needed as it is over here. Rupee by pound is needed as it is, so you can take 92. You need pound by euro. What is given in the question is euro by pound. So 1.1 you have taken reverse into 1 by 1.1. You will get rupee by euro. What is the rate? 92 divided by 1.1. 83.6364. You will get 83.6364. 83.6364. Apply that over here. 4 digits. Okay, remember 4 digits. 83.6364. 8,000 into 83.6364 is 8,000 into 83.6364 is 6,69,091 rupees. 6,69,091. Final answer, decimal you need or don't need, that is your disclosure. If you want, you can give 0.2. 20 paisa in 6 lakh is an immaterial figure. Okay, so that is your call, but the exchange rate 4 places in decimal, that is important. Okay, final answer 6,69,091 rupees. Got it? One final question based on cross rates. We are going to do one final question based on cross rates. Shall I do it? Chalo. You, rupees only. You import. Was the previous question also import? The previous question also import. So now we will export. Okay, we will shuffle it around. Export and import. You are an export and import industry. You export it to Japan. You export it to Japan. Let's go to US itself. You export it to US. Goods worth dollars 1,50,000. The exchange rates are rupee by euro, rupee by pound, or rupee by euro. That's right, rupee by euro. Rupee by euro is 83.85. Pound by euro 1.1, 1.2. Dollar by pound is again 1.15, 1.25. Shall we do it? How do we do it? You export it to US, goods worth 1,50,000. Find the receipt. Okay, question is obvious. Find the receipt. Receipt in which currency? You are Indian, so receipt in rupees. So receipt in rupees is equal to $1,50,000 into rupee by dollar. Rupee by dollar, do you know? You don't know. So let's go to working note 1. Working note 1. cross rates. Give the subheading cross rates itself, so the examiner, when he is checking, he knows you have computed cross rates. That's a separate step. He will give you marks for that step. Okay, if you have got the cross rate itself, you will get so many marks. So give the subheading as cross rates itself. Working note 1, cross rates, rupee by dollar is equal to, I think the rates are euro and pound. There are two intermediate rates. So you have rupee by euro. Now you want euro to get cancelled, into euro by pound, into, now pound to get cancelled, you need pound by dollars. How would I decide these rates? Euro and euro should get cancelled. Pound and pound should get cancelled. Okay. Rupee by euro. Now let's take out the rates one by one. Now let's first decide whether it is bid or ask. Pay attention. You are exporting to US. You are exporting to US. What will you get? You will get dollars. When you export to US, you are an Indian person. When you export to US, US person will send you so many dollars. Do you need dollars? You have to convert dollar to rupee. How will you do that? First convert dollar to pound, then convert pound to euro, then convert euro to rupee. Ask rate, bid rate. Okay. Rupee by euro bid rate is taken as it is 83. Euro by pound, it is ask rate, and again it is in reverse. What is given in the question is pound by euro. What you need is euro by pound. So 1 by 1.2 into 1 by 1.2 into dollar by pound. What they need is dollar by pound, what is given is dollar by pound. So you can take 1.25 as it is, multiply into 1.25. 1.25, that's equal to 83 divided by 1.2 into 1.25 is 86.4583. 86.4583. Multiply that over here. $86.4583. 1,50,000 into 86.4583. 86.4583 is 1 crore 29 lakh 68,745 rupees. 1 crore 29 lakh 68,745. 1 crore 29 lakh 68,745. That is your receipt in rupees. Got it? Pakka? So that is done with cross rates. Now some tips I want to tell you, something you can keep in mind. Understand guys, of the major currencies, currencies that have symbol, pound is the strongest currency. Pound is stronger than euro. When I say pound is stronger, understand, when I say pound is stronger than euro, it is not a relation to economy, it's not the economic size, the currency is just fixed at normal. So when you give euro by pound, pound is a stronger currency, your answer will be 1.1 or something, it will be greater than 1. Conversely, pound by euro will be 0.8. Okay, euro is greater than dollar. Euro is greater than dollar. Dollar is far greater than rupee. Dollar is far greater than rupee, which means, you know, rupee by dollar is around 70 now. Dollar by rupee will be 0.02 something. Okay, 1 by 70 accordingly you will get. Okay, so this is the currency size. So if you have this in mind, the final answer you can just check. 99% is satisfied. I think in one of the questions this doesn't satisfy. That's an error in the question. Okay, such errors might occasionally creep in. By and large, this is satisfied. And rupee is greater than yen. Yen, by the way, is the currency of Japan. Again, rupee is greater than yen. I think 1 rupee equals 3 yen or something around that range. 1 rupee is 3 yen. So, you can say yen by rupee. 1 rupee is 3 yen. How do you give it in quotes? Yen by rupee is 3. Okay, 1 rupee is yen 3. Okay. Again, mind you, Japan is a stronger economy than India for, I guess, for the next few years. Next couple of years, India is catching up to Japan. So, very soon we might overtake Japan, but still Japan, in terms of per capita, they are far greater than India. In terms of per capita income, they are far greater than India. The economy is much stronger than India. So, the currency value has nothing to do with the economic size. Indian currency is stronger than Japanese currency. Dollar is stronger than Indian rupee. Euro is stronger than dollar, and pound is stronger than euro. Although after Brexit, the strength of pound has kind of reduced, it is still stronger than euro. This is the currency size. Now, a couple of theory topics that you have to know. One of the topic, there is application also. You can solve the problems, but since we have up the bit down the ask, since we use the mantra of up the bit down the ask, this concept is not relevant in practical, in solving the problems. Okay, so this is only for theory. There are two types of quotes. They are direct quote and indirect quote. They are direct quote and indirect quote. You go to a shop and you want to buy apples. You go to a shop, you want to buy apples. What do you say? Buy sir, 1 kilo apple, how much does it cost? What is the cost of 1 kg of apples? And the shopkeeper will say 1 kg of apples cost rupees so much, rupees 100 or whatever. Okay, 1 kg of apples cost rupees 100. If you go to the bank, he will say $1 costs 70 rupees. Okay, so a direct quote basically says $1. 1 is the base currency, $1 costs 70 rupees. $1 costs 70 rupees is your direct quote. Okay, basically the base currency is foreign. The base currency is foreign currency. Now, indirect quote. Imagine you go to the petrol pump. How do you buy petrol? How do you fill your petrol, fill your vehicle with petrol? Okay, very rarely does it happen. You take 2 liters of petrol, 1 liter of petrol. Normally, how we do? Bhai sahab, for 100 rupees, how much petrol? Cheta, 500 rupees, how much petrol? Okay, so petrol is one of those commodities that you don't check 1 liter how much. For 100 rupees, how much petrol you are getting? Or for 500 rupees or for 1000 rupees, how much petrol you are getting? If you go to the bank and the banker tells you for 1 rupee, you will get so many dollars. For 1 rupee, so many dollars. The base currency is home currency. The base currency is home currency. This is an indirect quote. Okay. Direct quote, the base currency is foreign currency. In indirect quote, the base currency is home currency. Understood? In 3 countries in the world, in UK, Canada and New Zealand, 3 countries which are on the ground. Australia, I don't think so. In UK, Canada and New Zealand, they give indirect quote. Okay, so mind you, this might sometimes come for the exam. They might say the currency is in UK. In a London based bank, so is the currency. In a London based bank, the currency is and so and so, and they might simply say 1.5. In a London based bank, the currency for dollar is for 1.5. Okay, if they simply say dollar is for 1.5 or US is trading at 1.5, understand in UK it's always indirect quote. In London, always pound, the home currency, pound is the base currency. Okay, just keep that in mind. In London, always pound is the base currency. In every other country in the world, or either in UK, Canada and New Zealand, in every other country in the world, the base currency will be foreign. In India is generally rupee by dollar. In US, it will be dollar by rupee. Okay, such is the way quotations are given. Understood? One more point, some questions. instead of symbols, instead of rupee by dollar, they will give alphabet. If you go to an exchange center, if you go to a bank or a forex dealer, they very rarely use symbols, because symbols, for the very simple reason, I am also struggling in Excel, symbols are difficult to type. Okay, so generally when you go to a bank or an exchange counter or a forex dealer, he will give quotations in 3 alphabets. His quotation will be USD by INR. His quotation will be USD by INR. Okay, pay attention guys, his quotation is USD by INR. If the quotation is in 3 alphabets, it has to be read in reverse. USD by INR is equal to rupee by dollar. USD by INR is equal to rupee by dollar. Similarly, if they give USD by GBP, GBP is Great Britain pound, USD by GBP is pound by dollar. So it has to come in reverse. In majority of the questions that we do in class and that comes for the exam, the symbols are given in symbols. Okay, understand? US dollar, if it is US dollar, then it is the same. If it is IN rupee, or if it says dollar by GBP, if it says dollar by GBP, then also it's normal, it's the same. Only if both the currencies are in 3 alphabet symbols, 3 capital alphabet symbols, even US dollar, don't worry, US dollar also you don't have to worry. If it is 3 alphabets, USD by INR, if it is in 3 alphabets, you have to reverse it, rupee by dollar. In 1 or 2 questions that we do in class, very rarely in exam, they give alphabets, but if at all it comes in alphabets, you have to be alert. USD by INR is rupee by dollar. Okay, USD by GBP is pound by dollar. Understood? Pakka? Ho gaya? Thorough? Shall we start doing the problems now? Ready? Alright, take out your question paper and let us do question number 1. Or do you want a break? Let's take a small break and start with question number 1. Take a small break for 10 minutes. Shall we begin with question number 1? The price of a bond just before a year of maturity is $5,000. Its redemption value is $5,250 at the end of the set period. Interest is $350 per annum. The dollar appreciates by, pay attention guys, the dollar appreciates by 2% during the set period. Calculate the rate of return. So this, I believe, is the first formula we have discussed in our syllabus. The first formula is rate of return. You can take 5 minutes of your time, won't even take 5 minutes, quickly compute the rate of return. Shall we do it? Okay. So you can pause and you can resume right now. Calculate the rate of return. Now R equals, what is the rate of return? D1 plus P1 minus P0, that's the same concept. Okay, so this was a share. You can apply the same concept of return to a bond. Okay, you're getting an interest. How much is the interest? Interest is $350 plus you are getting a gain on redemption of 5,250. It's for 1 year. It's for 1 year. So 5,250 minus 5,000 divided by 5,000. You will get a rate of return of 600 by 5,000. I think that's 12%. 600 divided by 5,000, that is 0.12 or 12% into 100, you will get 12%. Okay, now one sentence I have ignored. Okay, the dollar appreciates by 2% during the set period. I have not considered that till now. Okay, so let us consider that also. Pay attention. After 1 year, you are getting $350 and you are getting 5,250. And the question says that after 1 year, the value of dollar appreciates by 2%. So this 350 and this 5,250, when you get it, when you are getting it, its value is greater than by 2%. $5,000, 5,000 only. But this 5,250 and this 350, both of them have increased in value by 2%. Shall we consider that? So, accordingly, you will get return equals 350 into 1.02 plus 5250 into 1.02, or you could take 5250 plus 350, 5600 into 1.02 minus 5000. I have considered the effect of dollar appreciation. Dollar's value has increased. So, for you, $350, not 350. For you, since the value of dollar has appreciated, $350, when you convert to your home currency, whichever it is, it will have that 2% increase with respect to 5000. You don't have to convert it to your home currency. You just know there is a 2% increase. Consider that effect also. Consider 2% increase effect also. The whole divided by 5000. That's equal to, let's consider that, 5600 into 1.02, 5250 plus 350, 5600 minus 5000. The whole divided by 5000, you will get 14.24 into 100, you will get 14.24 percentage. Okay. What is the correct answer? Both are the correct answer. Mind you, this 2% influence has some value only if you are not American. If your home currency is not US dollar, you are converting it. Guys, understand, dollar appreciate, the value of dollar has appreciated by 2%. So, when you are converting US dollar to Indian rupee, you will get the 2% increase. Or you are in UK, you are converting US dollar to UK, you will get the 2% increase. What if you are American itself? What if you are what if your home currency is US dollar itself? This 2% will not have any benefit. On a daily basis, the value of rupee will increase and decrease. Are you realizing it? You go to the same shop, you buy the same products, it will not be the same. Of course, the value of rupee will have influences. For example, the value of petrol, the cost of petrol will increase. If the value of rupee decreases, the cost of petroleum will increase, the cost of diesel will increase. All that effect will be there. So, that is on the product. The value of rupee per se is not affecting you. It will have indirect effects. The interest rate might fluctuate. All that effect will be there. Directly for the bond, it's not affecting you. Okay, $350 for you is 350 itself. 5250 for you is 5250 itself. So, if you are dollar is home currency, if dollar is the home currency, then your rate of return is 12% itself. If dollar is a foreign currency for you, the increase in value of dollar has some relevance. Okay, so this is the rate of return if dollar is foreign currency. If dollar is a foreign currency, it's 14.24. If dollar is a home currency, it is 12%. Now, there is another answer that I see in the textbook rather. They take this entire thing and multiply by 2%. I think they get 12.24. Okay, they multiply the entire thing, 350 plus 5250 minus 5000. The entire thing is multiplied by 1.02, which I believe is a wrong answer. Okay, either don't multiply it. If dollar is home currency, don't multiply 1.02. If dollar is a foreign currency, 350 and 5250 should be multiplied by 1.02. Okay, this 5000 happens today, that should not be multiplied by 1.02. Okay, the effect of dollar appreciation will not affect 5000. So, multiplying the whole thing by 1.02 to me is a wrong answer. Okay, that is question 1. Question number 2. Let's look at question number 2. Okay, so we have a few basic questions like this. Let's quickly run through it. ABN AMRO Bank, Amsterdam. Where is Amsterdam? Amsterdam is the capital of Holland or Netherlands. Okay, earlier I think Holland, and before World War II, Holland and Netherlands has two separate countries. Now they are the same country. If I've got my history right, that's the history. Okay, now Holland and Netherlands are the same country. Before they were different countries. I think that's the history. ABN AMRO Bank, Amsterdam is the capital of Netherlands. Euro. Wants to purchase, home currency is euro. Okay, this bank wants to purchase 15 million rupees against US dollar. This bank wants to purchase 15 million rupees against US dollar for funding their Vostro account. What is a Vostro account? I will explain shortly. Okay, wait for it. I'll explain what is Vostro account, Nostro account, Loro account, everything I'll explain. For funding their Vostro account with Canara Bank, New Delhi. Assuming the interbank rates of US dollar is rupees 56.3625 3700. Read the sentence. The interbank rates of US dollar means US dollar is a base currency, is rupees 51.3625 has 3700. So this quotation is interbank rate of US dollar. Of US dollar means dollar is the base currency, is rupees 51.3625 slash 3700. When they are giving slash 3700, it means replace the last 4 digits, that is 51.3625 slash 51.3700. This is the bid rate, this is the ask rate. Suppose the quotation was the interbank rate of dollar is rupees 51.3625 slash 37. If they have given only 2 digits, then replace only 2 digits, 51.3625 slash 51.3637. Okay, if they have given only 2 digits, then replace 2 digits. If they have given 4 digits, replace 4 digits. Got it? 3700. Sorry, 3700 means here also 3700. 3700. Okay. Mind you, however, in no universe will bid rate be be greater than ask rate. In no universe will bid rate be greater than ask rate. This is absolutely impossible. Bid rate is always, because bank is buying at bid and bank is selling at ask. No way will bid rate be greater than ask rate. It will always be less than. The buying rate for the bank will always be less than the ask rate. Keep that in mind. Keep in mind the terminology also. Okay. So they'll keep shuffling the words. Okay, in FR also we have seen 3-month interest rate, 3 months forward. All those words they'll shuffle. You have to keep that in mind. Be on your toes. Assume the interbank rate of US dollar is rupees. Okay, you know what the rate is. Of US dollar means dollar is base currency. Rupee by dollar. Okay, I am writing it in terms of rupee by dollar because this is easier to find bid and ask. You can easily apply up the bid and down the ask. Can be applied in this diagram. Okay, rather than the sentence. This is nicer for you. What would be the rate Canara Bank would quote to ABN AMRO Bank? Further, if the deal is struck, what would be the equivalent US dollar amount? Okay, so what is required? What would be the rate Canara Bank would quote to ABN AMRO? So what is the rate for this transaction? Further, if the deal is struck, if the deal is shook upon, what would be the equivalent US dollar? That is required. Now, keeping that in mind, let's read the question once again. ABN AMRO Bank Amsterdam wants to purchase 15 million rupees. Okay. 1.5 crore rupees he wants to purchase. 1.5 crore rupees he wants to purchase. For funding their Vostro account, I'll explain what is Vostro account. Keep that aside. Okay, you don't need that sentence. You just need to know he needs to purchase 15 million rupees against US dollar. He wants to give US dollar and purchase 15 million rupees. What is he doing that for? That is not our business. Okay, he's clearly telling you he wants to purchase rupees against US dollar. Why is he doing that? Maybe he has import, maybe he has export, maybe he has a Vostro account he wants to fund. That is not relevant to the answer. Okay, I will definitely explain what Vostro account is, but for this answer, that sentence is not relevant. What we want to know is how the conversion is happening. So he wants to purchase rupees against US dollar, or in other words, he is converting dollar to rupee. He wants to purchase rupee against US dollar. He is converting dollar to rupee. Bid rate, up the bid. Okay, so you can write down answer to part 1. What is part 1? What would be the rate Canara Bank would quote? Okay, so he wants to buy this with Canara Bank. He wants to buy this with Canara Bank. Assuming the interbank rates are so and so, what would be the rate Canara Bank would quote? Canara Bank would quote the bid rate. You can write the answer. Canara Bank would quote the bid rate, that is 51.3625. Rupee by dollar, 51.365 would be the rate quoted by Canara Bank. Bracket bid rate. That is the answer. Okay. Part 2. Further, if the deal is struck, what would be the equivalent amount? What would be the amount? Okay. So amount in US dollar. Amount in dollars. Amount in dollars is equal to How much rupees you want? Rupees 15 million. Rupees 15 million. I think I'll give the zeros. 15 million means 6 zeros. Into the rate is rupee by dollar. Bang, 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 bang. No, you cannot multiply. Rupees and rupees, guys. Rupee and rupee you cannot multiply. You have to invert it. Okay, into 1 by rupee by dollar. You took the bid rate 56.3625. Note 4 digits of decimal. Question will always quote 4 digits of decimal. Very rarely, if it's an example and all, they'll give it 2 decimals. Otherwise, every question will have 4 digits. Unless again, if it's yen, then it will be only 2 digits. Okay. So 15 million. CA final students, I need not teach you how many zeros million has. Okay. 15 million is 1 crore 50 lakhs. Okay. Do the math. Divided by 56.3625. The rate is correct. 56.3625 of the bid. You will get 2,66,134. In your final answer, decimal is not necessary. Rupees 2,66,134. He will have to invest $2,66,134. Okay. Now, before we move on, 2 questions you have to answer. Question number 1. Now, we know the shortcut. Rupee by dollar, up the bid, down the ask. We know the shortcut. Tell me, if you are using the bank story, here you have an avenue for confusion. Pay attention. ABN AMRO Bank, guys, ABN AMRO Bank wants to purchase rupees against US dollar with Canara Bank. Okay, ABN AMRO Bank wants to purchase 15 million rupees against dollar. So here ABN AMRO Bank wants to purchase rupees, he is selling dollars, or Canara Bank is buying dollars. Now you see, both are banks, and we have discussed bankers buying rate. Now when both are banks, how do you discuss? Pay attention. Here ABN AMRO Bank wants to purchase and he is approaching Canara Bank. Although both are banks, ABN AMRO is approaching Canara Bank. So in this question, ABN AMRO acts as a customer. And he is going to Canara Bank. Canara Bank is the bank in this case. Okay. Suppose HDFC wants to buy dollars. He is going to SBI. HDFC Bank, although both are banks, in this transaction, HDFC acts as a customer and SBI acts as a bank. Okay. So in this case, if you are going by that old method, understand when both are banks, ABN is approaching Canara, ABN acts as a customer, Canara acts as a bank. That's question number 1. What do you do when both are banks? Oh, but for us anyway, this is the best method. Okay. Point number 2. What is nostro? Okay, go to the formula page, write the theory, leave some space, guys. I think we last mentioned direct and indirect quote. There is one more point I want to mention in direct and indirect quote. I think I missed out one point in direct and indirect quote. So you can either leave some space or just keep in mind. I have to discuss one more point in direct and indirect quote. Okay. So write down the theory. The 3 words you have to learn might come for theory question. Okay. Nostro, vostro, and loro. These are 3 types of forex accounts a bank can have. Nostro, vostro, and loro. Okay, these are 3 types of accounts a bank can have. These 3 types of forex accounts a bank can have. First, nostro. How I like to remember, since the words are rhyming, you can get easily confused. What I like to remember is nose is your asset. Nose is a very important organ. Nose is an asset. Okay, so nostro account is your asset account. If a bank based in India, I don't say Indian bank because there is an actual Indian bank. Okay, if a bank based in India, if a Bank of India is also another bank. Okay, so if I'll say Bank India, there is no bank called Bank India. If a bank based in India opens an account with a foreign bank, Bank of America. Okay, if SBI has an account with Bank of America or Bank of London. That is called SBI's Nostro account. Okay, you have an account with SBI. Similarly, SBI is maintaining an account with Bank of London or Bank of America. Okay, so or Deutsche Bank. Deutsche Bank is a German bank. Okay, with Deutsche Bank. Okay, so SBI, a bank based in India, has an account with a foreign bank. That is called the Indian Bank's Nostro account. That is called the Indian Bank's Nostro account. It is like an asset account. Okay, I am depositing in a foreign bank. That is an asset account. I have an account with a foreign bank. Now, the reverse. If a foreign bank, if Bank of America has a rupee account in SBI, has a rupee account with SBI, okay, that is called SBI's Vostro account. That is called SBI's Vostro account. Nostro, SBI has a dollar account with Bank of America, or SBI has a GBP account with Bank of London. That is SBI's Nostro account. If Bank of London opens a bank with me in rupees, that is called my Vostro account. Okay, this is where transactions happen. Now, third one, this is the most interesting, this is my favorite. What is Nostro account? An Indian bank has an account with a foreign bank. A bank based in India has an account with a foreign bank in the foreign currency. Nostro account. A foreign bank has an account with an Indian bank in rupee. That is Vostro. Now, what is Loro account? When another bank has an account with a foreign bank, that is called your Loro account. When another bank has an account with a foreign bank. For example, if Punjab National Bank has an account with Bank of London, that is SBI's Loro account. Now you might have the confusion, Nostro understandable, Vostro also understandable. What the hell is Loro? There are thousands of banks having thousands of accounts with thousands of other banks. Everything is my Loro. How many Loro accounts do I have? Pay attention. Let's understand the working of Nostro, Vostro and Loro. See what has happened in Nostro account. SBI has an account with Bank of London. So what happens? SBI's favorite customer, example Vijay Mallya, wants to go to London. So Vijay Mallya approaches SBI and tells them, Mr. SBI, I am going to London. I will be back. Okay, promise I will come back. Okay, I will be back. But in the meanwhile, while I am in London, okay, I want to do some banking transactions. I want to deposit, I want to withdraw all those things. So I will approach your London branch. Okay, I'll approach your London branch. SBI says, sorry sir, we don't have branches in London. I think SBI does have a branch in London, I don't know. But SBI in this example says, sorry sir, we don't have a branch in London. Branch, subsidiary, something, ATM at least you have in London. No sir, London is very far sir, we don't have branch over there and all. Then what will I do? Then what will I do in London? If I want to do some banking transactions, what will I do? So sir, don't worry, you are my favorite customer, not to worry sir. I will talk to Bank of London. I have a Nostro account with Bank of London. If you want, you can go to Bank of London, think of it as your own bank and transact with Bank of London. We will set it amongst ourselves. Okay, so if one of your customers wants to go to London and he wants to do some banking operations, he can use SBI's Nostro account with Bank of London. Okay, or if SBI needs pounds, he will refer to Bank of London. Now, the other way around, an American person is coming to India, he can use BOI's, this is Bank of America's Nostro account. Bank of America's Nostro account, for us it's a Vostro account. Okay, so if a foreigner comes to India, he can use our Vostro account for his foreign transactions. Now, let's consider another example. This example is not that good. Let's consider another example. Bank of London has an account with Bank of Pakistan. Another bank has an account with another foreign branch. Another bank has another account with a foreign bank. That is SBI's Loro account. So Bank of London has an account with Bank of Pakistan. That is SBI's Loro account. What happens? One of your customers wants to go to Pakistan. Okay, so example, suppose the relationship between Indian banks and Pakistani banks are not that good. Okay, there is some jhagda happening between Indian banks and Pakistani banks. So you are not transacting with Pakistan. Now, when one of your customer goes to Pakistan, what will you do? SBI will tell them, sir, don't worry. I will talk to Bank of London is my macha. He will listen to whatever I say. Okay. Bank of London has a Nostro account with Bank of Pakistan. That account he will let me use. Okay. That account, this Bank of London's Nostro account, SBI can use for emergency sake. That is SBI's Loro account. Now see, SBI, look at another example. SBI has a Nostro account with Bank of London. Now SBI is a big bank, he has international connections, he has connections to every bank in the world. Now a small bank like Lakshmi Vilas Bank or Karur Vysya Bank, these small banks may not have Nostro accounts with Bank of London. This may not exist. So he will ask SBI, can I use your account for some transactions I want? SBI will tell, okay, why not? They will enter an agreement. That is Lakshmi Vilas Bank's Loro account. When an Indian bank has an account with a foreign bank, that is the Indian bank's Nostro account. When a foreign bank has an account with an Indian bank, that is the Indian bank's Vostro account. Okay, it's a liability side. Another person is maintaining an account with me, that is my Vostro account. Now, another bank, this another bank could be Indian or foreign. Another bank has an account with a foreign bank. That is your Loro account. Okay, so you enter into an agreement over here saying, I want to use your account, that is your Loro account. Understood? Nostro, Vostro and Loro can come for theory. Okay. Question number 3. XYZ Bank Amsterdam wants to purchase. XYZ Bank wants to purchase 25 million rupees against pound for funding their Nostro account, and they have credited Loro account with Bank of London, because they want to fund their Nostro account through their Loro account. The amount, calculate the amount of pounds credited. Ongoing interbank rates are per dollar rupees so much. Per dollar rupees so much means dollar is a base currency, rupees so much. Rupee by dollar 61.3625 / 61.3700 and per pound 1.5260 / 70, which means dollar by pound 1.5260 / 1.5270. Okay, so let's write down the rates first. What are the rates given? You have rupee by dollar. You have rupee by dollar is 61.3625 / 61.3700, and you have per pound dollar, which means dollar by pound is 1.5260, 1.5260 / 1.5270. Okay, what do you want? You want to purchase. How much does he want to purchase? XYZ wants to purchase 25 million, 2.5 crore rupees. Okay, so amount of dollars to be paid, amount of pounds to be paid, amount of pounds to be credited. Calculate, that's what they are asking. What is required? Calculate the pounds credit, amount of pounds credited is equal to rupees 2 crore 50 lakhs into pound by rupee, into pound by rupee something, into pound by rupee. So come to working note 1. Working note 1, cross rates. Working note 1, cross rates. Pound by rupee is equal to pound by dollar into dollar by rupee. Dollar and dollar get cancelled, you get pound by rupee. Written that is in order. Now let's go and check out the rates. So what is happening? You want to purchase rupees. This is the word, the key word is he wants to purchase rupees against pound. So he is fundamentally trying to convert pound to rupee. He is trying to convert pound to rupee. How will you do that? First he will convert pound to dollars. Then he will convert dollar to rupee. So in both places it's up the bid. Up the bid, up the bid. You have found out the rates are bid rates. Now let us come. pound by dollar. Over there what is given as dollar by pound. So you have to take it in reverse. 1 by 1.5260. Over here we need dollar by rupee. What is given is rupee by dollar. That also to be taken in reverse. 1 by 61.3625, 61.3625. You will get 1 divided by 1.5260 divided by 61.3625. 0.0106. You will get pound by rupee 0.0106. So multiply this one. 2 crore 50 lakh into 0.0106. Okay, don't write like this. Okay, please have space. My writing screen is very small. You are probably viewing it on your phone, so your phone is small. I am quite congested in that way. 2 crore 50 lakhs. When you are writing in paper, write it very neatly. Leave sufficient space in the left and the right. Write it neatly. 2 crore 50 lakh into 0.0106. You will get 2,65,000. Final answer is in pounds. Pounds 2,65,000. You will get pound 2,65,000. Okay. One more clarification. Some people 1.5260 into 1.61.365, you will get 1 by 1.5260 into 61.3625. You will get 93.6392. Some people write 1 by 93.6392, and that is multiplied. In that case, 4 decimal rule is violated. Okay. I don't imagine the examiner will penalize you so much. Okay, if your final answer there will be a small deviation is equal to 2 crore 50 lakhs divided by 93.36. You will get 2,66,000 instead of 2,65,000. Okay, such difference can come in your final answer. I don't think the examiner is going to penalize this, but I think this is a safer side. Okay, take up to 4 digits. Take up to 4 places in decimal. That's always safer. Okay, that's how it happens in the market. Now, question number 4. JKL Limited is an Indian company. He has an export exposure of Japanese yen 10 lakh. So, he has exported to Japan goods worth 10 lakh. Payable August 31st, 2014. Japanese yen is not directly quoted against Indian rupee. Achucho. Sadly, there is no direct exchange rate between rupee and yen. The current spot rates are INR by US dollar. See, a dollar symbol is there. So, it is not 3 alphabet quotation. Okay, it is a symbol quotation only. INR by US dollar, rupee by dollar. Again, from the size, 62.22. No way is dollar by rupee going to be 62.22. 1 rupee is worth $62. Won't happen anytime in the near future. Okay, this is the other way around. $1 is 62 rupees. This is rupee by dollars 62.22. Similarly, yen by dollar, $1 is 102.34 yen. Now, it is estimated that Japanese yen will depreciate to 124 level and Indian rupee will depreciate against US dollar to 65. It is estimated that this will happen. Okay, see, you have payable on 31st October. So, on 31st August, you assume that this is going to be the situation. Currently, spot rates are so much after so many months. On August, this is estimated to be the situation. Now, the forward rates for August 2014. What is the forward rate? For August 2014, you are fixing the price today itself. For August 2014, today itself you are fixing the price with the bank. The forward rates are INR by US dollar 66.50, Japanese yen by US dollar 110.35. Required. Calculate the expected loss if hedging is not done. Calculate the expected loss if hedging is not done. How the position will change if the firm takes forward cover. What is the expected loss if you don't do hedging? How the position will change if you take forward cover. Part 2. If the actual spot rates are on 31st August is so and so, is the decision to take forward cover justified? So, first let us take part 1. Okay. Calculate the expected loss. expected loss. Okay. So next to part 1, please write down the words AS11. I hope you are still maintaining the page numbers. Okay, I hope you are still maintaining page numbers, and if I have missed out explaining what is the difficulty or importance in any question, I hope you are writing it down next to the question itself. Please maintain that diligently. Every point I may not repeat. Next to question number 1, write down the words AS11. The loss over here is loss as per AS11. Let's check that out. Not exactly as per 11, but the idea is as per AS11. Okay. So I want you to compute 3 part 1. What is the amount? Is it a payable or receivable? Has an export exposure payable. See, here the word payable is there. However, it's an export exposure. So you have to understand payable is for Japanese company, payable by the Japanese company on 31st August. Okay, for you it's a receipt. Okay. Amount receivable at spot rate. Amount receivable at spot rate. Okay, what is the amount receivable at spot rate? Your export exposure of 10 lakh yen. So, yen 10 lakh into rupee by yen. What is rupee by yen? Rupee by yen, you have to find out. Spot rate rupee by dollar, you know rupee by dollar. Rupee by dollar is how much? 62.22. You will notice that the great benefit bid and ask is not given. Okay, they have only given one rate 62.22, so that much headache is avoided. Rupee by dollar 62.22, and you have yen by dollar is 102.34. So in that case, you will get rupee by yen. You can write, please write notes neatly. Working note, cross rates, rupee by yen is equal to rupee by dollar into dollar by yen. Dollar and dollar gets cancelled. Rupee by dollar is 62.22. Dollar by yen is not given. You have yen by dollar. So you have taken reverse, divided by 102.34. Let's check that out. 62.22 divided by 102.34 is 0.608. Have they given 4 decimals? It's 0.608. I think if you get in calculator, it's 0.6079 something. Okay, round off to 0.6080. 0.6080, or 10 lakh into 0.6080 is rupees 6,08,000. This is the amount not received, sorry, this is amount receivable. Amount receivable accounted at spot rate, or amount receivable at spot rate. Okay, so I think the question gets a little lengthy. Let's use Excel. Part 1, amount receivable at spot rate is rupees 6,08,000. Okay. Now, part 2, expected receipt on due date. Expected receipt on due date. The expected rates are given over here. Yen will depreciate to 124 level against dollar, and rupee will depreciate against dollar to 65. So the expected rates are rupee by dollar will become 65. Is it depreciating or appreciating? Earlier it was 62.22. Is it depreciating to 65 or appreciating to 65? Understand? Dollar is appreciating. Rupee by dollar. The value of dollar was 62. Now the value of dollar has increased to 65. Dollar is appreciating. Dollar appreciating means rupee is depreciating. They are at level with each other. Okay, when dollar goes up, you can say rupee has come down. Both mean the same thing. Okay, rupee depreciates or dollar appreciates. You can say that the cost of petrol has gone up, or you can say the value of rupee has come down. Okay, inflation. What is inflation? The value of currency comes down. Okay, so rupee has depreciated to 65 level, and yen by dollar is depreciating to 124 level. Okay, so accordingly you can take the cross rate, same as before. Rupee by yen will be equal to 65 by 124. That whole drama I am not going to say it, and you also don't have to do it. See here, if you know that it is 62.22 divided by 102.34, here also it will be accordingly 65 by 124. Even if there was bid rate ask rate adjustment, it would have been the same. Okay, you don't have to compute bid rate and ask rate for every computation. Got it? So the rate is, I think the rate is 65 divided by 124. The rate is 0.5242, 10 lakh into 0.5242 is 5,24,200. Okay. So 5,24,200 is the expected receipt. Okay, if no hedging is done, you let the market flow as it is, then on August 31st, you can expect a receipt at these dates of 5,24,200. Now 3, what are they asking? What is required? Calculate the expected loss if hedging is not done. How the position will change if firm takes forward cover. So third is receipt under forward cover. So under forward cover, the forward rates are 66.5 and 110.35. You know the math, you know how we did over here. You know what we have done over here. Same way you will get the rate 66.5, 110.35. 66.5 divided by 110.35. You will get that the rate is 0.6026. 0.6026 into 10 lakh. You will have a receipt of 6,02,600. Now they are not asking you to compute the receipts under 3 options. They are asking you what is the loss if hedging is not done. Calculate the expected loss if hedging is not done. How the position will change if firm takes forward cover. So loss if hedging is not done. Better to write the word expected loss. Expected loss if hedging is not done. You can also explain that is 1 minus 2. 1 minus 2. You will account today's sales happening 10 lakh and today's spot rates are given below. So today you will make an accounting entry of sales of 6,08,000, but you are receiving only 5,24,200. You are expecting a loss of rupees, don't forget the rupee symbol, 83,800. Expected loss if hedging is done. If you do hedging, 1 minus 3, you will account for 6,08,000 and you will receive 6,02,600. You can say you have a loss of 6,08,000 minus 6,02,600 of 5,400 rupees. Don't forget the rupee symbol. This is the loss. This is how the loss of hedging is not done. How the position will change if hedging is done. You can also say one more sentence. Loss will reduce if hedging is done by rupees. From 83,000 it is reducing to 5,400. You can say it reduces to 78,400. It reduces by 78,400, or you can also say due to hedging you are saving 78,400. Savings due to hedging is 78,400. Okay. Whenever they ask for loss, these 3 sentences are ideal. This is a complete answer. Every way there is no this answer is there. Every way you are computing the answer. Okay. Some answer. Now if you look at the textbooks, some answer will cover only this. Loss will reduce or profit due to hedging. is 70,400. They can also take it as, see, if you use forward cover 6,02,600. If you don't use forward cover, you will have to pay 5,24,200. Again 78,400. You can call this profit due to hedging. Sorry. This is profit due to hedging. Some answers have only this sentence. Some answers have only these two sentences. Okay. We don't know which answer has which. So let us write these three sentences for all scenarios. Okay. Loss if hedging is not done, loss if hedging is done, and savings due to hedging. Got it? Now part 2, they are asking if the spot rates in August 31st 2014 are so and so, is the decision to take forward cover justified? So you can say fourth one, actual receipt if hedging is not done. Actual receipt if hedging is not done, sorry, actual receipt if hedging is not done, rupees. So the rate I think is 66.25 and 110.85. So you will get the rate, cross rate as 66.25 divided by 110.85. You will get 0.5997 equals 10 lakh into 0.5977 is 5,97,700 expected loss, or rather actual loss. So over here you have expected loss if hedging is not done. In part 2, they are telling you the actual rates. This is the expected rate, this is the estimated rates on August 31st. This is the actual rate, the spot rate on August 31st is given. Accordingly, the actual receipt if hedging is not done is 5,97,700. Actual loss if hedging is not done can be 1 minus 4. 1 minus 4, 6,08,000 minus 5,97,700, you will get 10,300. The actual loss is still greater than if hedging is done. Is the decision to take forward cover justified? Yes, the decision to take forward cover is justified, because with forward cover your loss only 5,400. Without forward cover your loss would have been, your actual loss would have been 10,300. Okay. Done guys? Understood how loss is computed? Now, very important point, pay attention. Suppose the loss would have been, or the amount over here would have been, let's say, or rather into 0.6977. Suppose the actual receipt would have been 6,97,700, in which case you have a profit. You don't have a loss, you have a profit. Okay, guys, the other question is done. Now there is a bonus question for you. Please pay attention. Suppose the spot rate, the cross rate you found out was 0.6977 instead of 0.5977. The cross rate was 0.6977. The actual receipt was 6,97,000, and the profit if hedging is done was 89,700. Contrast that with loss if hedging is done is 5,400. What would have been your answer? Is the decision to take forward cover justified in this scenario? Okay, in the earlier scenario we said yes, the loss is minimum under forward cover, yes, the decision to take forward cover is justified. However, now is the decision to take forward cover in this scenario, is the decision to take forward cover justified? Is it? You can write the answer and write the sentence in your notebook, also very important. Loss due to forward cover is greater than without hedging. However, I am writing in caps to stress the word. In exam you don't have to write in caps. However, very important, understand, the purpose of a forward cover is not to generate profits or reduce loss, but to reduce risk. Why are we taking forward cover? The purpose of taking forward cover is not to make a profit. The purpose of taking forward cover is to reduce the risk. Today you have made a sale. Today you have made a sale and you're tensed. Oh my God, on the due date, how much will I receive? What will the exchange rate be? Oh my God, I am tensed. That tension, that risk must be avoided. That risk, you don't know. See, luckily, God favoring, on the due date, the exchange rate, the spot rate was favorable. What if it was adverse? You don't know. That is a risk you are having. That risk you want to avoid by ascertaining that you will receive 6,02,600 on the due date. On the due date, you are going to receive 6,02,600 and your exchange loss will only be rupees 5,400. That guarantee you want. That guarantee you want. That is the purpose of a forward cover. Okay, so the purpose of forward cover is to reduce the risk. The purpose of forward cover is to reduce risk. By taking forward cover, the risk is nullified. There is no risk now. There is no exchange risk because you have taken forward cover. The risk is nullified. Therefore, even though the loss is greater, the decision to take forward cover is justified. The decision to take forward cover is justified. Understood? Forward cover is our good bro, is our chunk bro. You cannot disown forward cover. Okay, even though the loss is greater, the objective of forward cover is to reduce risk, which has been attained. Therefore, it is justified. Okay, you can write one more sentence if you want. If the company, what is the company's name? Do you know the client's name? If JK Limited is risk averse, let him take forward cover. If he wants to take risk, then let him take, then let him go for not hedging. Understood? Question number 5. Okay, question number 5. Mind you guys, 5 and 6 are very similar questions. Question number 5 and question number 6 are very similar. 5 I will explain. Okay, 5 we will do together. 6 you have to do on your own, and question number 6 is a day before exam question. It's a beautiful question. It's a wonderful question. Question number 6 you have to do it on your own. Question number 5 we will discuss. Shall we? Now, question number 5. Pay attention. You sold Hong Kong dollars 1 crore. Value spot to your customer at rupees 5.7 and covered yourself in the London market on the same date when the exchange rates were. US dollar, 1 US dollar is Hong Kong dollar 7.5880 or 7.5920. Local interbank market rates for US dollar were spot 1 US dollar rupees 42.70 and 42.85. Calculate the cover rate and ascertain the profit or loss in the transaction. Ignore brokerage. Okay. So, how do we start reading the question? Let's start with the word calculate. Let's start with the word required or calculate. Calculate cover rate and ascertain profit or loss in the transaction. Okay. So, underline the word cover rate. This question is based on cover rate. Okay. So, next is the question, you can write down the concept also. The concept over here is cover rate. Let's see the question. You sold Hong Kong dollars 1 crore value spot to your customer. Question number 1. Who are you? Who are you? You are somebody who is selling Hong Kong dollars, or in other words, you are somebody who is selling currency. You are a forex dealer. You are a forex dealer. Okay, why? Because you sold currency. You are a forex dealer. Point number 1. What has happened? You have sold Hong Kong dollar 1 crore to your customer at rupees 5.7. Per Hong Kong dollar is assumed. Okay, per Hong Kong dollar is understood. Okay, so that is the rate at which you have sold to your customer. Your customer is someone who is buying currency, or someone who is selling currency, you are a bank, or you are a forex dealer. And covered yourself in the London market. Now let's check out what that means. Sorry guys. Let's check out what that means. You have sold, you are a bank. You have sold to your customer Hong Kong dollars 1 crore. Okay. Two things can happen. Case number 1, you had 1 crore. You had 1 crore. You sold 1 crore. Your position became 0. Or maybe you had 2 crore. You sold 1 crore. Your position became balance 1 crore. Or you had 0. You didn't have any money. Okay. Still you sold 1 crore. How do you do that? You borrowed. You borrowed 1 crore. This is the most likely scenario. Okay. The forex dealer may not have a stock of all currencies with him. Okay, when the customer asks, he'll immediately borrow $1 crore and he sold that to the customer. Okay, now you borrowed. Now in your balance sheet you have a liability of 1 crore. That is not an issue for you. You are a bank, you have thousands of crores of liability. However, this is in Hong Kong dollars. This is in Hong Kong dollars. You have a foreign liability which is a source of risk. Because when you repay the liability, you don't know what's going to happen. When you repay this 1 crore Hong Kong dollars, you don't know what the exchange rate will be. So that is a risk. Okay. Or even in this case, suppose you had also, maybe the bank has given you instruction that you should always have 2 crore Hong Kong dollar in balance. In either case, if you have a liability or your asset has come down, in either case, it is important that if you have sold, you square off or you cover by buying. Guys, you first sold Hong Kong dollar 1 crore to your customer. When you sold, your either asset value came down or you created a foreign liability which is a source of risk. So you are covering that position by buying. So the buy and sell will cancel each other out and your risk is nullified. You are back to the original position. Okay. So cover basically means opposite transaction. Now you have sold, you are going to cover with a buy. You bought, you will cover with a sale. Okay. So cover basically means an opposite transaction. So read the question once again. You sold Hong Kong dollar 1 crore at 5.7 and covered your position. How do you cover your position? You sold, so you covered it by buying. You bought Hong Kong dollars. They could have simply said you bought, but no, the examiner likes to trick you. And education purpose, you should know all the different words. Okay, covered yourself means you bought from the London market on the same date when the exchange rates were $1 US to Hong Kong 7.5880, 7.5920, and local interbank rates for US dollar so and so. Calculate the cover rate. These are the interbank rates in London. You bought from London, and in London these are the rates. What is the cover rate? Okay, so you can write down part 1. Cover rate to buy Hong Kong dollars. Cover rate to buy. Why is it buy? Because the original transaction was sale. Cover means opposite transaction to buy. Cover rate to buy Hong Kong dollars is equal to rupee per Hong Kong dollar. Rupee per Hong Kong dollar. How much? Let's go to work note. By the way, why is it rupee per Hong Kong dollar? The original rate given in question is rupees 5.7. Okay, the selling rate is 5.7 rupee per Hong Kong dollar. So here also we will take rupee per Hong Kong dollar. What does rupee per Hong Kong dollar? Come to working note 1. Working note 1. Rupee by Hong Kong dollar is equal to rupee by dollar into dollar by Hong Kong dollar. Correct? Dollar and dollar gets cancelled, you get rupee by Hong Kong dollar. Now, rupee by dollar. Let's go to the question. Rupee by dollar. What are you doing? You are buying. Let's write the dates in the formula page itself, or rather in the notebook itself. The rates given in the question are rupee by dollar 42.70 and 42.85, and you are also given Hong Kong dollar by dollar. For $1 means dollar is a base currency. For $1, Hong Kong dollar so many. Hong Kong dollar is a counter currency. Hong Kong dollar 7.5880, 7.5920. Always ideal that even though the rate is given in the question, you write it down as a working note. You write down the working note so that you can mark up the bit down the ask and you show your working also in the answer sheet itself. Okay, it's a very important working. Now, you are buying Hong Kong dollar. How will you buy? You will first convert rupee to dollar, then you will convert dollar to Hong Kong dollar. Understand the transaction, guys? First you sold the Hong Kong dollar for so many rupees. Now you are using that rupees to buy Hong Kong dollar. First rupee to dollar and then dollar to Hong Kong dollar. Rupee to dollar is down the ask, dollar to Hong Kong dollar is up the bid. Okay, so the rates are 42.85 and 7.5880. Rupee by dollar, I need it as it is, so I'll take 42.85 as it is, and dollar by Hong Kong dollar, I need dollar by Hong Kong dollar. What is given is Hong Kong dollar by dollar, so I have to take it in reverse. 1 by 7.5880. So you can take the rates. 42.85, sorry guys, 42.85 divided by 7.5880, you will get equal to 5.6471. The cover rate is rupee by Hong Kong dollar 5.6471, 5.6471. The cover rate. So in this question, what have we learnt? We learnt what covering means. Covering means you enter into opposite transaction to square off your position. You sold, probably you borrowed and sold. Probably you borrowed, probably it was a short sale. Probably it was a short sale. You covered your position with a buy. And the rate for buying is 5.6471, which is nothing but your cross rate. Got it? Part 2 of the question. Part 2. Ascertain the profit or loss in the transaction. What is the transaction over here? You sold Hong Kong dollar at rupees 5.70. You sold Hong Kong dollar at 5.70 and now you have bought in the cover rate at rupees 5.647 per Hong Kong dollar. What is the profit or loss in the transaction? Let's check it out. Sale of 1 crore. Give the heading computation of profit or loss. Sale of 1 crore Hong Kong dollars at rupee by Hong Kong dollar 5.7 is rupees 5 crore 70 lakh. Purchase 1 crore Hong Kong dollar, this is a cover transaction, at rupee by Hong Kong dollar 5.6471, that is rupees 5 crore 64 lakh 71,000. You sold at 5 crore 70, you bought it back at 5 crore 64, you definitely have a profit of rupees 5 lakh 29,000. This is your profit in the transaction. Got it? That is question number 5. Question number 5 deals with cover rates. Shall we move on to question number 6? Question number 6? Shall we? Alright. You, a foreign exchange. So in this question they are clearly saying you are the foreign exchange dealer of a bank. Are informed that your bank has sold a TT, stands for telegraphic transfer, basically spot. Okay, TT means spot. Now you have sold. Okay, it's not in the forward market, you have sold now itself. TT on Copenhagen. Where is Copenhagen? Mentioned. Copenhagen is the capital of Denmark. For Danish kroner 10 lakh. If my history is not wrong, Denmark is now part of European Union and the currency is now euro. Danish kroner was the old currency. Okay, before I think 1990 or something, or before it was integrated with the European Union, the currency was Danish kroner. Now it is euro, if my geography is right. For Danish kroner 10 lakh at the rate of 1 Danish kroner is rupees 6.5150. You are required to cover the transaction either in London or in New York. You know what cover means. Okay, where are you covering? Either in London or New York. In the previous question they told you it was London. Here either in London or in New York. The rates on that day are as under. Mumbai, London. What do you mean by Mumbai, London? See, rupees 74.30. Mumbai, London, rupees 74.30. What is the currency of London? Pound. You know currency of London? You know currency of London is pound. Okay. So rupees 74.30 means it is rupee. Rupee is 74, which means it is 1 pound. Rupee per pound is 74.30. Also note that question will not always explicitly say rupee per pound is 74.30. Okay, you have to understand rupee 74 means for 1 pound it is rupee 74. Okay, here they have, luckily they mentioned rupees. What if this rupee also was not there? Then you have to guess. 74 means, you know, rupee is a weaker currency. 74 meaning it will be rupee by pound. Okay, these type of adjustments can come. Mumbai, London is 74.30, 74.32. Mumbai, New York. What is Mumbai, New York? Rupee by New York is in US. Okay, I hope you know that. Rupees 49.25 and rupees 49. London, Copenhagen. Copenhagen is in Denmark. Danish kroner 11.42, Danish kroner 11.4350. And New York, Copenhagen, that is DKK by dollar. DKK by dollar 7.5670 and 7.5840. In which market will you cover the transaction? London or New York? And what will be the exchange profit or loss in the transaction? Ignore brokerage. Can you do that? Please take 10 minutes of your time and solve question number 6. Okay, I think you can do it quite easily. So question number 6 is it's a day for exam question. It's a full length forex question. Okay, so now you have the questions of cover. There is some element, I have not explained the question fully to you. There are still some elements that you have to figure out on your own. How to approach, what is step 1, what is step 2, that you have to figure out on your own. Okay, again, cross rates and all those things you have to figure out on your own. So this is a challenge for you. Please take 10 or 15 minutes of your time. Sit very calmly. I always tell my students, sit very calmly. Many students I have seen write with the assumption, the answer is wrong, the answer is wrong, the answer is wrong, gone. That is how many students write the answer. Okay, no, you are my students, your answer is right. Your answer is right, your answer is right. Okay, just write it very bravely. Okay, don't write under the assumption that your answer is wrong. That's a very wrong attitude. Although, maybe every question you have done so far might be wrong, this one will be right. Okay, so don't write it that way. Be confident and write it. Chalo, take 10 minutes, pause, and should we do it? I think we'll do it in Excel. We'll do it in Excel. Okay, so I resumed back. All right, we'll do it in bamboo paper itself. So what is the first part of the question? In which market you will cover the transaction? Okay, which market you cover? What is cover, by the way? Your foreign exchange has sold a TT. You have sold a spot, so cover means buy. Cover means to buy. Where will you cover? Wherever it is cheaper, you will cover. So let us find out the cover rate. Cover rate in London. The cover rate in London, rupee by DKK. So the rate given in the question is 1 DKK is rupee 6.1510. So rupee by DKK is equal to rupee by pound into pound by DKK. Rupee by pound into pound by DKK. Now, what are the rates given in the question? The rates given in the question are rupee by pound, DKK by pound. London on Copenhagen is DKK 11 means DKK by pound. So the rates given in the question are rupee by pound and DKK by pound. What are you doing? You are buying DKK. You are buying DKK, which is first convert rupee to pound, then convert pound to DKK. Down the ask, up the bid. So the rates are rupee by DKK, rupee by pound was down the ask 74.32. What we need is rupee by pound. What is given is rupee by pound. So take it as it is 74.32. 11.32. DKK pound, it is up the bid. So the rate to be taken is 11.42. What is given is DKK by pound. What we need is pound by DKK. So take the inverse into 1 by 11.42. 74.32 divided by 11.42 is 6.5079. That's equal to rupee by DKK is 6.5079 rupee by DKK. This is the cover rate in London. Now let's look at the cover rate in New York. Write the heading neatly, cover rate in New York. Give subheadings. Okay, IFM, I have noticed many students who have done neatly until now. In IFM, the presentation kind of gets shabby. Okay, so first subheading, cover rate in London, rupee by DKK so much. Cover rate in New York, rupee by DKK. So see over here, I am not going to do much debate. Okay, if you want, you can check one by one. Rupee by dollar, dollar by pound. Each thing you can check one by one. Or if you want to kind of increase your speed, see. What did we do for rupee by DKK in London market? 74.32 divided by 11.42. For New York, it's going to be the same. 49.2625 divided by 7.5670. Here, for rupee by pound, you took ask rate. Here also you will take ask rate. Here bid rate, multiply and divide, everything will remain the same. So you can take the rate as 49.2625 divided by 7.5670. You will get 6.5102. Okay, the rates are almost in the same region, which means your answer is correct. Okay, suppose this rate instead of 6.5102 was 8.5940. Then you could have panicked. Okay, now the rates are almost same, so your answer is correctly. Don't worry. 6.5102. Show the working. 49.2625 divided by 7.5670. That is equal to 6.5102. 6.5102 rupees by DKK. Tell me now which rate is better, 6.5102 or 6.5079? 6.5079 is a better rate. So write the decision. London market provides a better cover rate. The London market provides a better cover rate because the cover rate is lower. So for this, you should know cover means buy. Buy what? Buy the base currency of DKK. Okay, simply say buy the base currency of DKK. Rupee to pound, pound to DKK, everything is correct. Okay, buy. And you should also know, some people know very well what to buy. And then they ask me, sir, which one should we buy at the higher rate or lower rate? Buy always the lower rate. Okay, buy at the lower rate of 6.5079. Now last, they are also asking you to ascertain the profit or loss in the transaction. The profit or loss in the transaction. So write the words sale of DKK. How many DKK did you sell? You sold 10 lakh at the rate of 6.5101. So 65 lakh. I'll use Excel. Okay, sale of DKK. You got 10 lakh into 6.5150. You got 65 lakh 15,000. Purchase of DKK at cover rate from, where will you buy? From London, because that is cheaper. That was 6.5079, 10 lakh into 6.5079, you get 65 lakh 7,900. You sold at 65 lakh 15,000, purchased at 65 lakh 7,000. Profit is 7,100 rupees. Profit was rupees 7,100. Some students also compute the profit in New York, which is not required. Okay, you have decided in part 1 that you will cover the transaction in London. So I strongly believe that exchange profit only from London is required. Okay, New York, you are not even going to transact. You are not even going to go to New York. So why compute the profit over there? Okay. So that is it with question number 6. I hope you are able to do it on your own. If not, don't worry, there are another 28 questions left in the chapter. You will get solid grip. Okay. However, the basics of bid and ask, up the bid, down the ask, you have to be thorough in these questions. Okay. By question number 7, by the next question, you should be able to thoroughly compute bid, ask and the cross rate. Okay. So by question 7, make sure you are thorough. Okay. Shall we do question number 7 now? Do you want a break? Have you had a break before? Okay. So if not, you can take a break now and we will do question number 7 after the break. Okay. So you guys are back. Okay. Question number 7. Simple question. On January 28th, 2013, an importer customer requested, so the customer is the importer, mind you, a bank to remit Singapore dollar short form is SGD, 2.5 million, 25 lakh, okay, it's given in million, 25 lakh, under an irrevocable letter of credit. What is a letter of credit? In a future question I will explain to you, okay, in a future question I will explain to you what is an irrevocable letter of credit. For now, just mind you, we have to remit Singapore dollar 2.5 million. However, due to unavoidable factors, the bank could not affect the remittance. Bank could affect the remittance only on 4th February 2013. The interbank market rates were as follows. So, you are given the interbank market rates. The bank wishes to retain an exchange margin of 0.125%. Please understand, underline exchange margin of 0.125%. There is a discussion to be had with exchange margin. Okay, underline, have a note on what is the discussion. So, when you revise this document, okay, suddenly you know what are the points. Okay, exchange ratio over here, this point, these are the important points. You clearly know where the discussion is to be had. Okay, so underline exchange ratio. Here, for the first time, the question is explicitly saying calculate rate in multiples of 0.0001. I have been saying that all along. Take 4 digits in decimal. Okay, that's how practically it happens. So, can you do it on your own? Take 5 minutes time. What is required? Start with the word required. What is required? How much does the customer stand to gain or lose due to the delay? Please calculate very quickly. Take 10 minutes time and calculate. Back, shall we discuss? Okay. So, exchange rate, write down part 1, step 1. If you already written down, note the presentation, okay, have steps, have some kind of order. Okay, the examiner shouldn't have to scramble looking for where is the answer. There should be some kind of organized structure. Very, very important as a professional. Step 1, exchange rate on 28th January. See what is happening? On 28th January you are supposed to remit, but however the bank was able to remit only on 4th of February. Okay, Donald Trump came, some things happened, there was a lot of issue, there was a lot of drama, Republic Day, that this was happened, bank could function only on 4th February, bank caused a delay. Because of the delay, what happened? Let's see, what is the exchange rate on 28th January? Rupee by Singapore dollar. Let's try taking the direct quote as much as possible. There is one thing I told you, I forgot to mention in direct quote. Okay, after this question, I will do it. Please remind me. Okay, after this question, rupee by Singapore dollar is equal to. Look at the rates and how do you compute the cross rates? Rupee by Singapore dollar is equal to rupee by dollar into dollar by pound. GBP is Great Britain pound. Okay, GBP is pound into pound by Singapore dollar. Okay, so dollar and dollar gets cancelled, pound and pound gets cancelled, you get rupee by Singapore dollar. Now, what are the rates given in the question? In the question, they have given $1 is so many rupee. They have given rupee by pound, rupee by dollar. They have also given 1 pound is so many dollars. So, they have given 1 pound is so many dollars, or in other words, dollar by pound is given. They have also given 1 pound is so many Singapore dollars. They are also given Singapore dollars by pound. These are the currencies given. What are you supposed to do? You are supposed to remit. You are supposed to remit, that is pay. An importer is requested to remit Singapore dollars. You are supposed to pay Singapore dollars. You are supposed to deposit Singapore dollars with your supplier. You are supposed to pay in Singapore dollar. How do you pay in Singapore dollar? Convert rupee to Singapore dollar. How do you convert rupee to Singapore dollar? First convert rupee to dollar, then convert dollar to pound, and then convert pound to Singapore dollar. So here it is ask and bid. So the rates from the question you can take out rupee by dollar. The ask rate on 28th February is 45.90. The ask rate dollar by pound on 28th February is 1.7850, and the bid rate Singapore dollar bid rate on 28th February is 3.1575. However, it has to be taken 1 by 3.1575. 3.1575. Okay. So shall we compute what is the rate? Rupee by, or I will take in the next page. The rate as on 25th February is rupee by Singapore dollar. Let's check it out very quickly. What is it? That's equal to 45.9 into 1.7850 divided by 3.1575. You will get 25.9482. Rupee by Singapore dollar, 25.9482. 9482. The answer is not done. Part 1, the answer is not done. You also have to consider the exchange margin. You also have to consider, see in the question they have given you the exchange margin, that is a commission to the bank. You have to pay an exchange margin of 0.125 percentage. So, exchange margin, tell me exchange margin is 0.125 percentage. Tell me, are you supposed to add or less exchange margin? Is it add or less? What do you do? Exchange margin is add or less. See guys, don't think in terms of add or less. Don't think in terms of add or less. Think of it this way. See, what are you doing? Are you buying or selling Singapore dollars? You have to remit Singapore dollars. How will you remit Singapore dollars? You have to go to the bank and buy Singapore dollars. You are buying Singapore dollar. What is the rate? For 1 Singapore dollar, you are paying. You are paying 25.9482. Understand? For 1 Singapore dollar, you are paying 25.9482. Okay. You also have to pay. You are paying 25.9482. You also have to pay 0.15 percentage. Both are pay. Therefore, add. Okay. Or in other words, you can learn the shortcut. I don't recommend you by heart, always apply your mind. However, the shortcut is, if you are buying, you have to add the exchange margin. If you are buying the base currency, you have to add the exchange margin. Think of it the other way. Suppose you were an exporter. Suppose you are an exporter and you are receiving Singapore dollar. Okay, exporter, you are receiving Singapore dollar. What do? You are selling Singapore dollar. Okay, for 1 Singapore dollar, guys pay attention, when you sell 1 Singapore dollar, you will receive 25.9482 rupees. You are an exporter, you receive Singapore dollar. What will you go and do to the bank? You will go to the bank and you will sell Singapore dollar and receive rupees 25.9482. However, what about exchange margin? Exchange margin will the bank give you? Are you receiving? No. You have to pay. You are paying the exchange margin. You are receiving 25.9482. However, exchange rate is pay. Therefore, here you have to subtract. Or in other words, if it is a sale, your exchange margin has to be reduced. Guys, understand? If you are buying, for each Singapore dollar, you have to pay 25.9482. Additionally, you have to pay exchange margin, add. If you are selling, you will receive 25.9482, but you have to pay. So here you have to subtract. Okay, exchange margin. This is a very, very important and confusing adjustment. Students often go wrong over there, especially when you do it in a hurry. When you do it in a hurry, there is a mistake that you can make. If you have done this question on your own and you have made some mistake, please note it down. Very often, including myself, even during class, I myself forget to take exchange margin. It happens all the time. Okay, so rate is 25.9482. You have to take 0.125% into 0.125 percentage is 0.0324, 0.0324. You will get 25.9482 plus 0.0324 is 25.9806 rupee by Singapore dollar, 25.9806. Instead of 9 I wrote 8. Don't worry, ho jata hai. Everybody makes mistakes. You should correct your mistake at the earliest. That's the most important thing. 25.9806. Okay, this is the situation on 28th January. This is the situation on 28th January. What did you do? You took ask and bid. Now on this rate, you can easily find out what happens on 4th February. Okay, so you can write down step 2, amount received. What is the heading we wrote over here? Exchange, that is the exchange rate on 20th January. Now here you can write exchange rate on 4th February. Exchange rate on 4th February, rupee by Singapore dollar. Over there it was ask and bid. Here also it will be ask and bid. So 45.97 into 1.7775 into 1 by 3.1380. Over there it was ask and bid. Here also it will be ask and bid. Multiply, divide, multiply, divide. Okay, let us do that very quickly. 45.97 into 1.7775 divided by 3.1380. You will get 26.0394. 26.0394. Add exchange margin of 0.125 percentage. 0.125 percentage. Okay, add exchange margin of 0.125 percentage. 26.0394 into 0.125 percentage. You will get 0.0325. 26.0394 plus 0.0325 will give you 26.0791. 26.0791. 0791 or 0719? 0719, sorry. 0719 rupee by Singapore dollar. Okay, so this is the rate on 4th February and this was the rate on 28th January. Now, what is the loss? So, there are two ways. You can either multiply it with 2.5 million. Okay, you can multiply the 2.5 million and you can compute the total loss, or you can compute the loss per Singapore dollar and then take it. Okay, so over here you can take loss due to delay rupees per Singapore dollar. Rupees per Singapore dollar is equal to, it would have been 25.9806. However, you had to pay 26.0719. This was the situation on 20th Jan. On 20th Jan, you had to pay only 25.9806. However, on 4th February, the rate increased to 26.09. You have suffered a loss of 0.0913. Okay, total loss will be on 2.5 million. So 2.5, 2 crore 50 lakhs, sorry 25 lakhs into 0.0913, you will get a total loss of rupees 2,28,250 rupees. is your total loss. Okay, because of the delay, you have a total loss of 2,28,250. Got it? Done. Let us move on to question number 8. Question number 8 is the most typical question. This is the kind of question, if you look at the practice panel, a great majority of the questions are of this type. Question number 8. Okay, I am not going to read the question. I want you to read the question, spend 10 minutes time with the question and try doing it on your own. Okay, this is the kind of question that is a great majority. However, we are not going to do too many questions of this time. Okay, we are going to discuss concept. In question number 8, there is no concept involved. Even bid and ask is not there. Giving only the rate. Okay, question number 8 is the kind of question where no concept. Okay, this question could very well be in any chapter. This question could very well be asked in inter-level debtors management. They could ask this question. Okay, so this is a very simple, straightforward question, but you have to read the question, understand the situation, and then deal with it. Okay, so please take 10 minutes time, and then we will solve it. Done? Okay, shall we solve? Okay, let's read the question first. Okay, let's read and understand the question. Z Limited importing goods worth $2 million requires 90 days to make the payment. The overseas supplier has offered a 60-day interest-free credit period and for additional credit of 30 days an interest of 8% per annum. The bankers of Z Limited offer a 30-day loan at 10% per annum and quote for their foreign exchange is as follows. Spot $1 is 56.50, 60 days forward is 57.10, 90 days forward is 57.50. You are required to evaluate the following options: pay the supplier in 60 days or avail the supplier's offer for 90 days credit. What are you required to do? Required. There are two options. Option 1, pay supplier in 60 days. Option 2, avail supplier's offer of 90 days credit. Keep this in mind. Keep the required in mind and then read the question once again. So Z Limited is importing goods worth $20 lakh, $2 million. He requires 90 days to make the payment. Okay, so he is telling the supplier has called him, they have agreed the purchase, goods have come, and Z Limited, sir, thank you for your service, we have received the goods. However, we need 90 days to make the payment. The overseas supplier has offered 60 days interest fee. So you ask, sir, little COVID situation, lockdown is going on, we don't have any sales, very poor revenue, so we need at least 90 days. So after 90 days, maybe these online classes I will be able to sell, and hundreds of students, each student will recommend their friends also to purchase these online classes, and this online class will be a huge hit. And let me come back to the question, sorry I got distracted. So after 90 days, hopefully in 3 months, I will be able to get the money and I will pay you this $2 million. Supplier says, buddy, 90 days is too long, we will give 60 days interest free credit. But sir, 60 days not possible, sir, I need 90 days. Okay, so for 60 days you keep the credit interest free. Okay, if you want further 30 days, you said you want 90 days, no? For further 30 days, you need interest, you will have to pay us interest of 8% per annum. Okay, so you can pay us after 90 days, 60 days interest free, but for the remaining 30 days you have to pay interest of 8% per annum. 8%, that is too much, sir. Sir, I will get back to you, sir, I will just confirm within half an hour, I will confirm. Immediately take out the call and call your banker. Call the banker. The bankers of Z Limited offer 30 days loan at 10% per annum. Banker, bro, this situation, foreign client is asking me to pay 8%, what will I do? Bank will say, sir, we will give you loan for 10%. Bloody bluntly, oh mate, I am worrying about 8%, but he is asking me 10%. Okay, their foreign exchange quote is as follows. So I am thinking, okay, foreigner anyway 8%, that is better only, no? Okay, I will pay him, I will take his credit of 90 days, I will pay him 8%, I will pay him after 90 days. But the issue is, after 90 days, your exchange rate is 57.50 per dollar, rupee per dollar 57.50. If you are paying him after 60 days, your exchange rate is only 57.10. Okay, for $1 you only have to pay 57.10. After 90 days, you have to pay him 57.50. Which is better? Option 1, pay the supplier in 60 days. How will you pay the supplier in 60 days? You will have to borrow from bank. borrow from bank. So I think now you have good clarity. Okay, if you want, you can again pause the video and continue, try solving the problem. But understand this question, solving the answer is very simple. Understanding the question, understanding the situation, guys. Keep repeating. Imagine you are sitting in the exam hall. Imagine you are sitting in the exam hall. Imagine this is your company. Okay, in the exam hall, you are the CFO's table, and you are the CFO, and you have to decide. Think of it that way. The finance manager has given you a report. Sir, this situation, what should you do? Pay in 60 days or pay in 90 days? You are the CFO, you have to decide. Think of it that way. Okay, so if you pay in 60 days, the exchange rate is smaller, 57.10. How will you pay in 60 days? You will have to borrow from your banker in India. Borrow from the banker in India and pay the supplier. Okay, you will get a lower exchange rate, but you have to pay interest at 10%. Or don't borrow, 10% is too much, 10% is too expensive. You are ready to pay the supplier's interest. You are ready to pay the supplier's interest of 8% per annum. But you can pay only after 90 days, where the rate is 57.50, which is better. Let's check it out. Scenario 1. Pay supplier in 60 days. Pay supplier in 60 days. What will happen? Amount to be paid at 60-day forward rate. Amount to be paid at 60-day forward rate is equal to amount to be paid at 60-day forward rate is equal to rupees. How much is it? $2 lakh, $2 million, $20 lakh is equal to 20 lakh into what is the exchange rate on 60th day? After 60 days, the exchange rate is 57.10. So you will have to pay him 20 lakh into 57.10. You will have to pay him 11 crore 42 lakh rupees. Additionally, add interest paid to local banker. Add the interest paid to local banker is rupees. On this 11 lakh 42,000, you have to pay interest for additional 30 days. Okay, so into 10% into 30 by 365. Okay, you will get an interest of 9 lakh 38,630 total payment. You will have to pay rupees 11 crore 51 lakh 38,630 rupees is the total payment you will have to make if you are paying your supplier in 60 days. Scenario 2. Pay supplier in 90 days. Now, if you are paying supplier in 90 days, amount to be paid in 90 days will be dollars. You will have to pay 20 lakh, or you can write it this way, amount due, or leave it here, you can do it very well, 20 lakh plus you will have to pay 20 lakh into 8% into 30 by 365. Normally we take 1.08, but now 30 by 365 comes to an odd figure, so we are adding it. Okay, 20 lakh plus 20 lakh into 8%. That's what we normally did at 20 lakh into 1.08. But here 30 by 365 is confusing. That's why I did this way. Okay, you will get 20 lakh 13,150. This is the amount. Amount payable in rupees is rupees 20 lakh 13,150 into what is the exchange rate? 57.50 is the exchange rate. You will have to pay 11 crore 57 lakh 56,000. In scenario 1, you had to pay only 11 crore 51 lakh. In scenario 2, you have to pay 11 crore 57 lakh. So although the interest rate over here is only 8%, interest rate is lower, the exchange rate is 57.5. That is a deal breaker. Okay, you would rather pay interest at 10% at a lower exchange rate. Here the exchange rate is only 57.5. 1. That seems to be better. Okay. Now look at the order also. Over here some students make this mistake. Over here in scenario 1 I have computed interest in rupees. Some people convert 20 lakh at 57.5. Then they separately compute the interest and then they convert the interest also at 57.5. Answer, final answer will be the same, but this is better presentation. Okay, in scenario 2 interest also compute in dollars and then convert the total amount to rupees, because in scenario 2 the interest is payable in dollars. Okay, very minute things. Presentation marks you will still get, but presentation this is better. Okay, got it? This is question number 8. Okay, question number 8 is not over. You have to write the decision. It is better to pay the supplier in 60 days by borrowing from bank. You have to write the decision. Please don't stop the answer without writing the decision. Okay, that is question number 8. Before question number 8, let us discuss the small concept of direct quote. There is one thing I forgot to mention it: direct quote and indirect quote. Pay attention, guys. Direct quote and indirect quote. Just pay attention. Just take care of this relationship. Direct quote and indirect quote. Okay, pay attention. Bid rate of direct quote is equal to 1 by ask rate of indirect quote. That's the relationship. Now, what is the direct quote? Pay attention. Direct quote, rupee by dollar is 70 and 75. What is the indirect quote? Dollar by rupee. Suppose you take it 1 by 70 and 1 by 75. Suppose you take 1 by 70 and 1 by 75. What is 1 by 70? 1 divided by 70 is 0.0143 and 1 divided by 75 is 0.133. You will get 0.143 and 0.133. Sorry, 0.143 and 0.0133. You create a situation where bid rate is greater than the ask rate, which is impossible, which cannot happen. Okay, so this is wrong. It is the other way around. It is 0.0133 slash 0.0143. The bid rate under indirect quote is 1 by ask rate of direct quote, and the bid rate and the ask rate of indirect quote is 1 by bid rate of direct quote. It comes crisscross. Okay, and it will tally. In any question you take. Example, see over here, you go up the bid. You are taking 70. Here you will go down the ask. 1 by 70 is 0.0143. That will tally. Okay, understand? So, bid rate of direct quote is equal to 1 by ask rate of indirect quote and vice versa. Ask rate of direct quote is 1 by bid rate of indirect quote and vice versa. Please have that relationship with you in your book. Okay, that is done. Come to question number 49. Come to question number 49. The following are the spot exchange rates quoted at 3 different forex markets. USD by INR. What is USD by INR? Rupee by dollar. Okay, understand those are 3 alphabet quotation. Those are 3 alphabet quotation. It is rupee by dollar. USD by INR is 48.30 in Mumbai. GBP by INR, again mind you, is rupee by pound. I have told you when it's a 3 alphabet quotation, you have to read it in reverse. Is 77.52, and dollar by pound, GBP by USD, you have to read it in reverse. Dollar by pound is 1.6231 in New York. The arbitrager, an arbitrage player, has US dollar 1 crore. Okay, a player has US dollar 1 crore. Assuming that there are no transaction costs, Explain whether there is any arbitrage gain possible from the quoted spot exchange rates. Assume there are no transaction costs. Explain whether there is any arbitrage gain possible. Look at what is happening. Let's consider a different example. Let's consider this example. There is rupee, there is dollar, and there is yen. $1 is 70 rupees, or let's say 50 rupees. Rupee by dollar is 50. Rupee by dollar is 50. And you also know, or maybe you don't know, that rupee by yen, let's say yen by rupee, 1 rupee is 3 yen. Understand? 1 rupee is 3 yen and $1 is 50 rupees. In that case, $1 should be how many yen? 1 rupee is 3 yen and each rupee is 50, each dollar is 50 rupees. 1 rupee is 3 yen, or you can say this way, $1 is 50 rupee and each rupee is worth 3 yen. So $1 should be equal to 150 yen. However, $1 is worth 165 yen. This is a mistake in the market. The cross rate says it should be 150, however it is 165. This is a mistake in the market. How can you correct it? You cannot correct it, but you can exploit it. Pay attention. What can you do? Let's say you have 150 yen. Suppose you have 150 yen. Convert that to rupees. 150 yen can be converted to 50 rupees. 50 rupees can be converted to $1. And using this exchange rate, $1 can be converted to 165 yen. See, you started off with 150 yen, but you have ended up with 165 yen. 15 yen you have a profit. 15 yen you have a profit. Okay, guys, understand? 150 became 50 rupees. 50 rupees became $1. $1 from this exchange rate became 165 yen. You have 15 yen profit. You can repeat this transaction a million times, or you can increase the value. Instead of 150 yen, you can have 150 billion yen and make a 15 billion yen profit. That will be 50 billion rupees profit. Okay, so this is a mistake in the market. Similarly, in this question, is the cross rate correct? Is the cross rate correct? Is there any mistake in the market? Is there any mistake in the market? Let us check it out very quickly. So you have rupee, dollar and pound. The currency rates are rupee by dollar, given the question, rupee by dollar 48.30. You are also given in the question dollar by pound. Dollar by pound is 1.6231 and you are also given rupee by pound is 77.52. 77.52. These are the rates. Okay. Now what is the starting point? Your starting is dollars 1 crore. Your starting point is dollars 1 crore. You have two choices. You have two choices. Either start 1 crore, convert that to rupees. You will get so many rupees. Convert that to pound and convert that back to dollars. Option 1. Or option 2, the other way around. You have dollars, convert that to pound, convert the pound to rupees and convert the rupee back to dollars. You have two options. Try it both ways. Try it both ways and see what happens. Okay, you can try it in the diagram or you can try it in the step. Do you want to try it? Take 10 minutes time and try it. Okay, step 1. Convert dollars 1 crore to rupees. You will get rupees 48 crore 30 lakh. Step 2. Okay, I am going the first route. I am converting dollar to rupee. Next is converting rupee to pound. Convert rupees 48 crore 30 lakh to pound. You will get GBP. 48 crore 30 lakh into what is the rate? The rate is 77.52. You are converting rupee to pound. Rupees 48 crore 30 lakh into divided by 77.52. You will get 62 lakh 30,650. Step 3. Convert pounds GBP 62 lakh 30,650.1548 to dollars. You will get dollars. What is the exchange rate? Dollar by pound. You have so many pounds, pound 60 lakh something, into pound, you will get it correctly, into 1.6231. You will get 1 crore 1 lakh 12,968. This is the correct answer. This is the arbitrage strategy. This is the arbitrage strategy. This is the correct arbitrage strategy. Now there is a wrong arbitrage strategy. You need not write it, but just note it down in the notebook. Not for the exam, just for your knowledge. Arbitrage strategy. You could go the other way around. You could convert dollar to pound. So you'll have the same 3 steps. Step 1, let's just check it out for seeing how it works out. Step 1, convert dollars to pound, dollars to GBP. Okay, you will get GBP 1 crore dollars into, the rate is 1.6231. Dollars 1 crore into 1.6231 doesn't work. You have to divide by 1.6231. You will get 61 lakh 61,049. Step 2, convert GBP to rupees. You will get rupees. The exchange rate is 77.52. Multiply, divide, you decide. It's multiply into 77.52. You will get 47 lakh 76,000 47 crore 76 lakh 4,583. Last, convert rupees to dollars. You will get dollars into or divide. You have rupees. The rate is rupee by dollar. Rupees into rupee by dollar doesn't work. Divide 48 divide by 48.30. You will get 98 lakh 88,293. You started out with 1 crore. But when you made a circle, you ended up with 98 lakh 88,293. Here you have a loss of 1 lakh 11,706 dollars, and over here you have a profit of 1,12,968 dollars. 1,12,968 dollars you will have a profit. This is the correct arbitrage strategy. Understood? Now this is how the exam works. I have always told you, whatever you prepare, the exam will ask you one step higher. This question came for exam also. When I wrote it in November 2015, this question came for exam. Slight difference. The rates were slightly different. I want you to do it as homework. Okay. The rates were USD by INR 48.30 slash 48.80. GBP by INR was 77.52 slash 77.92. GBP by USD was 1.6231 slash 1.6331. Also, exchange margin was 0.5%. Exchange margin of 0.5% was there. Okay. The trick is in each conversion, sometimes you'll have to add exchange margin, sometimes you'll have to subtract exchange margin. You have to check it out. Okay. This question is a homework for you. Okay. You're going to try it out on your own, and if you don't get it, you can email me or message me, or in our discussion forum there will be a column where the answer might be discussed. Okay. So that is a homework. I am not going to discuss it right now. Alright. So we've had a long day. Shall we call it a day, or do you want to do one more question? Do you want to do one more question? We'll wrap it up for the day. Okay. We'll wrap it up for the day, and we will continue the next day with forward. Okay. The computation, we have tried using forward rates. Now in the next day we will start with computation of forward rates. How do you compute the forward rates? PPPT, IRPT, all those concepts we will discuss. So tomorrow's agenda hopefully will be forwards, money market hedge, and let's see if we can start derivatives. Either we'll start derivatives tomorrow, or the last day we'll start derivatives, or maybe we'll split derivatives into two. Tomorrow we'll start it, and the last day we'll finish derivatives. Maybe we'll split derivatives into two. Alright, done. So that is it for today, guys. Bye bye.